Happy Wednesday, folks. Hope you're doing all right. It is Wednesday or Wednesday, August 9th, 2023. This is Redben. You can get a hold of me on Twitter at RedbenTrader. If you want to learn more about the algo, the execution tool I'm using, it's based on the Trade and Perform algo, which is available to paid members of the team. It's developed by my coach, Simon. So if you want to learn more about it, give him an email, trade the letter N, wordperform at gmail.com. I'm not certain if there's any room in the trading room currently. We grow very slowly, but you can always chat with him and see if you can get a 5-day free pass and at least even see if it's something you want to consider. So today it's been nuts. This is exciting. So on the candle, I'm honestly like slightly embarrassed to admit that I actually had a long here, and took it first of all with micros, which was like, I mean, it was the right thing to do considering the conditions, but and I got out of it during the pullback here, and while I was aware that it could definitely continue, I wasn't aggressive enough to give it follow through. It makes complete sense that this happens, and I can explain why in a minute. But I just thankfully I'm green on the day. But I mean, considering that I had the location, I had the execution signal was one that I've been practicing, and I just didn't manage it as well as I wish I would have. Especially with micros, I need to remember that like if there's an opportunity like this, which doesn't happen very often, where you are moving an expanding range from the previous day, where overnight you traded above it, and then during the day you're trading below it. If there's exhaustion, if there's signs of exhaustion at a location, and it's particularly when you look to the left, I have to do it on a higher time frame. Here, you know what? I've got another chart with the higher time frame. Hold on. So, all right. So this is my 2-hour chart with my composite fixed volume profiles. And so you can see back here in June, we traded in this range previously. And we for a number of weeks, we chopped around in here. And then, did what we always did, tried to leave the area, came back in, tried to leave the area again, swept liquidity, tried to get back to the other side, got stuck at VPOC, and then left the area. It's not always exactly the same, but it always kind of rhymes with that. And so when you leave the area and then you exhaust up here, it can be like a divergent high or just something like this, where it's like a bull flag that sort of falls apart. The first assumption, the first guess, I guess you can say, because you never really know, but the first guess is we're going to probably go back to wherever there were a lot of trades done in the recent past. So if we're rejecting this area as too expensive, then where was fair value before this? If it was, assuming it was lower, look to the left and look lower before you entered this new area, and see where everyone agreed that it was a good value before, which is going to be the value area here. Now, that's a really hard place to trade when you're in there. Like, you can imagine trying to trade at the VPOC here, you get chopped to pieces. But once you leave the area, coming back in, it makes a lot of sense to look for scalps if it's just a test like this. And then if you've actually left the area and developed volume higher, it also makes sense to look back there for a longer term bounce to actually, it's basically a sign that this is being rejected. So this was rejected up here, but if we return to this composite, like consolidation period, and reject that as well, well then price is going to have to come back up here and develop value higher again. So the first place we should be looking is the value area high of the composite, which we visited yesterday. We actually slipped into the value area, which should have been concerning. If anybody was long looking to break out of this consolidation, that move down here, it needs to come back up and break over this high. Otherwise, this pretty much always happens. Here, I can find one back here. Here. So see how they visited below and then they returned to the value area, but they couldn't collect liquidity up here. They got stuck. The next step almost always is sweep the liquidity down here. And then if you find buyers, usually because to the left there's something else, that there's like trap sellers basically that become buyers, or people waiting to buy at a good value. Then the next step usually is come back to the VPOC of the consolidation, and if this continues to hold on pullbacks, you're going to come in and sweep this liquidity. And then when that doesn't happen, if you leave the area, return, hit the VPOC, and then can't take the liquidity, again, what we should expect is that this liquidity is going to get taken. Well, it did. But you're still inside of the value area. So these guys remain trapped and push the price higher, but of course it comes back one more time for a test of the VPOC to make sure everybody who wants to be long is filled, and then rockets out of there. Well, the same exact thing can happen just on like a bigger fractal. So if you imagine this right here, this pullback, right, that's basically what we've produced here, is we've come back in, and it just happens to align perfectly with this VPOC. Not perfectly, but close enough. And so they returned to that level and found buyers again. Now, does it mean we're going to come all the way back up here? No, unfortunately, no. What it does usually mean, though, is because there was assumed liquidity down here at the bottom of this consolidation range, and generally you can imagine this whole area here, this composite value area, it's basically seen as the same price. So if you just like block, where is this? It's this one. So once you've left the area, right, not just here, but like really left it, this whole zone is basically one price to the market on the higher time frame. They see this as too expensive, this as too cheap, and this is fair. So you're going to get sweeping moves through this relatively easy, much easier than initially when you were building. And that's why once you build the value, you can see that these ranges start to expand. Well, now we've actually visited above it. And so when we come back in, we should expect this range, the wider ranges, to repeat. So if not expand further. So like, for instance, if we just measure, for instance, what that last push was, right? So it came from up here. Get me there. From up here, it came all the way down here and exhausted before the value area low and before this liquidity grab, and the result was leave the area, right? That range is like the natural range that NQ is able to do, and the fact that it aligned inside of this value area after leaving is basically what leads us to leave the area. So if we take that same range, obviously it's not going to be perfect, right? But now we align it to where we were last night. Now, the top, the high, is obviously not the same as this high, right? But we can take the range, the number of ticks, the number of points, and oh, hold on, let me make sure I've turned the sound off here. Yeah, my bad. There we go, Bryce. Thanks for letting me know. I do. I had the desktop echoing. Thank you. So yeah, the range of this expansion, we can like hyperimpose over here from wherever it began, and then where we would. Now again, this isn't going to be perfect, but you're going to get a sense for what like distance you might see as it comes back in. Oh shoot, I messed it up. So if you tried to do that anywhere else, it'll usually be too big because we're not. Now up here, this is a new value area, so you could actually do the same thing here. Up here, this composite, it would be the last one to sweep. So here, come here. There we go. So see how that, it starts here. That's the biggest sweep of that range. If we take that down here, we stick it on the high from the overnight. That brings us magically to the low volume, the value area low of that previous consolidation. So, and that's not random. It's if, in my opinion, what that is expectations that if the market comes back here, it's probably coming to here, so they turn it here, because that way when it exhausts, it'll be kind of where it belongs, underneath the liquidity that we know is down there. So the expectation should always be that, like, that would be normal. Let's put it that way. That would be normal. If we see something bigger than that, something has definitely changed. It's not just technical, like mathematical, like algos responding to the fact that like we're quote unquote oversold. But if you want to know where do we get oversold or where might this turn start, that's a very crude way to find it, is just look for a consolidation range, preferably over a number of days if you're doing it on a big chart. You can do this on a small chart too, but if you're going to use like a multi-day chart, you want to find a consolidation that lasted multiple days. Measure the biggest sweep. So I suppose it's after it's been developed. So, because this first one is also pretty big, but there was no, that's based probably on the previous consolidation. Here, I'll show you. So the biggest sweep is here to here. Oh, that's pretty close. So now if we come up here to this high, it aligns with the value area low. I don't make the rules, but that's just the way it works. Is it always perfect? No, but it gives you a pretty good guess of what the market expects. So when it gets further than that, the expectation should be come back to value. Same thing here. You can look at, again, that was the one they were basing it on. So here's this high. Well, once they got further than that, naturally, price wants to come back. Where does it get stuck? At the VPOC. Then where does it go? Back to what is considered a normal range extension for that time, right? If I measure it from this one, gets me value area high. It's voodoo, yes, but no, because it's actually just the result of math being like what everyone knows. Everyone knows how to measure. Everyone knows how to do math. And that's what they have to base things on. So yeah, if you make that kind of a move in the future, um, you should expect that that's going to produce like that there's going to be more value inside of those boxes than outside. Let's just put it that way. So looking at today now and having that sense of knowing that this blue line here was basically the point where like an extension, it shouldn't continue on beyond that without finding some sort of buy pressure unless there's a change in regime such as like news or something like that. That obviously messes it all up, right? But assuming it's just a technical movement, then getting down here is like as far as I would sort of expect. Doesn't mean I'm just going to buy it there. No, 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 no. But it means anything before that, I can still be looking for, first of all, continuation on a pullback like this. I could technically be shorting now because it's hitting the old value area high after doing what was less than a move than I would expect, the range that I would expect. So I am not confident, for instance, that that low is the low. It might be for today. I don't know, but I'm not buying calls and holding for a week, for sure, until we at least exhaust that and we see what's down there. That's the way I think about it. But if you're intraday trading, you can certainly look at the previous time we were in this zone and say, well, where were most people getting involved? They were probably getting involved at the VPOC, at the value area, or near the value area high. And in that case, that's usually what it is because we went higher. But then the value area low is also an important spot to watch for either bounces, or what's better is you actually visit below it, exhaust, and then recover it. And that's, you can get really big multi-day reversals down there. But what's interesting is with my voodoo range levels, which I'm not sharing how I come up with it, but it's also math. So same kind of thinking. Let's just put it that way. It's just like creative math. And if you look at that, those are the yellow lines, and they will act in kind of the same way. It's not that they're a brick wall, and sometimes we actually orbit around them. But then if we do orbit around them and they become resistance or support, that is a change in character. So this is neutral, and then they expand. They find support at this one. It looks bullish. They come back up to where everybody agreed it was fair. It's just a different way of thinking about it. It's also inside of this value area, and that's not, we won't go into it. But then they find sellers sitting right there, which aligned almost perfectly with the VPOC of that consolidation if you extend it to today. And if we keep extending it until they leave the area and stay away, there's a good chance that these will actually align almost perfectly. So I had a sense yesterday, well, when I woke up this morning and seeing this rejection there, it made a lot of sense that we were going to come back and take that low. So I was not going to be a buyer in here. That didn't make any sense to me. Even though it was below the overnight range, it was yesterday's fair value, and on the bigger time frame, we had rejected the VPOC where everybody agreed that it was fair on this upper value. So that means if we're rejecting it, well, we're probably going to go find value lower. And like I said, I had basically two ways to find location, which was find the VPOC of the previous consolidation and or look for voodoo range levels or a fib drawn off the voodoo range levels. So the dashed lines here, all I'm doing, and I showed this in my voodoo range video, and you can find it on YouTube if you search voodoo range. But so this is anchored to a VR level, and you can try different ones. I just find the one that like aligns the best. And you can see that this one has a lot of really clear touches. So it was obvious to me at the beginning and Sunday night. And then what I usually look for is I find the biggest volume, because that there's a reason that that's important. If everybody did business there, it's obviously an important move, which is here. And then I look for the high or low that doesn't near there, that doesn't coincide with a Voodoo range level. Because if I pick one, like if I swing this to like one that's like this at the Voodoo range level, it's not that it's not going to work. You'll still get like good, decent touches and stuff, but it's going to be aligned. The big numbers are going to be aligned with Voodoo range levels. So you're mostly going to get the midpoint and like the fib extensions that I could have gotten without even thinking about price action. So instead, I can, and technically you could use any of these highs or lows, but like, then if you'd use this one, you'd just have to move to a different VR. But let's say I wanted, like this one is near a VR, right? It's still going to be useful, but a lot of the levels will be like overused because like this, the 200, it's like, I don't need a line there. I've already got a line there. So what I really want to know about is kind of like the hidden levels that are nowhere. I'm not able to see that they're related to the VR level, but like they are. They're just like subdivisions of it. So like 88.6, 78.6, 61.8, 50. They all have like, again, not brick walls, but if I just said, okay, I'm not going to touch this until I see that it's rejected one of these, I mean, I'm going to do a lot better. And like here, I won't get the low, but when it doesn't reach the VR level that maybe I really wanted to see it bounce off of, I can wait and say, well, if it can recover this and not close below it, that's probably a good sign. And then I could attack back to the midpoint. And then if it comes up here and it doesn't reach this VR level, well, then I got to wait until it gets over one of these and rejects it. Now, I would never start a trade here, but if this wouldn't have happened, for instance, if I wouldn't have had that rejection, but I thought it was bearish, I might watch for the 78.6 to be tested. And then once see here, it closed over it. So I'd have to wait till it rejected and then tested it. And then, so if you look here, I'll make it bigger. So we got over it. This is because the actual resistance is higher, but we fell back through it and then closed above it again. And there's another pivot here, but I wouldn't be looking for a short in this case, in this location, unless I saw it fall, try to get up there and reject. So this would be the first opportunity to short there. That's the thinking anyway. Oh yeah, we are rejecting that. I'm not surprised. So that was like textbook perfect, like printed out, posted on your wall. That's exactly what I want it to look like here. And then if you look at the one up here, I don't know what the level is. 127.2. So here, can't really be sure, but with the VR level, it's pretty clear, right? Well, here, they slipped right through the VR level, so that's not something I'm going to be watching for as a bounce, because if anything, I'm rejecting it there and looking for a short. But then when this happens, but with volume, I would never short down here if I'm seeing this compared to that. And look at this. I mean, you've got a ton of volume here, and then you actually went lower in a regular trading hour session and had less volume. That's divergent, and you almost always need some sort of rest in that situation. So once I see this breakdown, that is a divergent low, and I don't want to be selling down there. I want to be looking for buying opportunities if they reject off a level that makes sense. The other option, though, is you could have used yesterday's low and waited for them to test it, reject it, and then take it back. Now, we didn't get a retest here. So you would have had to have like a very small time frame that found entry in here. But on the algo, you can do that. And then when we lift and we can't reach the value area low of this consolidation, I'm going to assume that what we're doing is coming back and maybe testing this again, or perhaps coming down to actually properly take out the low. But if we just doji here and then lift and come back through this, we could absolutely take the liquidity up here. It's not bearish until you see the rejection. And while they're trying to reject, it's you could short on an intraday time frame, but with this divergence, I would not be holding puts either. I don't want to be buying calls, but I also don't want to be holding puts, because as long as they're in here, we could literally just chop and make a new consolidation range. And eventually, maybe in like days, we could come down and sweep this and sweep this, but that does not have to happen in the next hour. So most likely we just end the day in here, and that is basically neutral on this time frame. But on the bigger time frame, we've clearly at the moment rejected higher. That's right. We've rejected higher, right? And we've also, for the time being, rejected lower. So if I had to guess, I would say we're going to trade somewhere. Come here. You know what I'm trying to do. Somewhere in here. That's going to be the range, basically. And I don't know if that's going to last a day or a week. You don't know until it happens. So anyway, that's the big picture. I forgot to keep an eye on the... All right. Thanks again, Bryce, for letting me know that the speakers were still on. Okay, so looking at all that, the blue here is just yesterday's VPOC. And that's from the profile. So this is 8:08 yesterday, and 8:30 means the regular trading hour session. And here we had the volume point of controls, the bottom one, and then that it's the biggest profile, the thickest, the widest profile as well. So it's also the market profile, POC. And then if you look at the purple, that's the value area. And so that's going to be generally the hardest place to enter a trade, because it's going to get choppy in there. But this is a very good target if you leave the area and return. It's just not a great place to enter. So if I was to get short here, you can see the red is where we are right now. If I was going to short here, the problem is that I've got this VPOC in my way, and I'm in the value area of yesterday. So they're not going to be clean. It's not going to be like set up one time, hold runners, and it goes to your target, if that's what you're doing. But when it comes down here underneath yesterday, finds support at a spot that makes sense, like I said, or it recovers yesterday's low, you are going to often get like quote unquote clean opportunities to come back to VPOC. It's just that once you get to VPOC, it's going to get messy again. But you can see that we actually put in is it single prints? I think it is, up here, which definitely could be a problem in the future for bulls, because if that continues to act as resistance, we had that previous consolidation. The yellow is highs and lows, like previous days, highs and lows, highs and lows that can act as like good turning points. But when we sneak up there, get into yesterday's overnight range, and again we had an anomaly here near the close, and that rejects like right at value area low, and you get single prints, that the bulls basically need to get back up there and develop volume in that area. Otherwise, it's going to be resistance. Yes. Yep. Yep, I do too, Bryce. It's definitely a good target. So, for instance, if I was looking for a short, like this is the 24, which is going to be a little bit, let me get rid of the lines because I haven't explained why they're there, so I will take them away for now. Okay, so everything else is based, well, there's a couple different, but the blue one is based on the profile. So if I was looking for a short, I had the location based on the candlestick chart, and I would have the primary target that I'd have to make sure that I'm getting risk off at the VPOC. So, for instance, this would be a sensible place to short with a stop up here or on a pullback. But this, shorting here with a stop up here and a target down here, is pretty tight. So the opportunity is often kind of slim when you're this close to the VPOC. Similarly, on the way up, you can see that down here, you clearly had plenty of room. Whether or not you got the setup, we can get into. But risk reward was not a problem. And then as we approached yesterday's low, we should expect some resistance. So you don't want a long right before the first test of it, because sometimes they're actually sweep. And this one can also get swept. So that's a very difficult place to trade generally. But like that, see how they test it and then they sweep that low, because there's liquidity on a very small time frame. But when the apex drop here, and they've already taken out the orders that were sitting there from like overnight, well, now that move is much easier, especially when you've gotten over the purple bar and the only bar with the box. I know it's got a purple box, and we'll get into that, but getting over the purple bar in particular, and especially when it has a yellow box, is going to open you up for bigger moves as long as you're trading with the trend. So, but even here, once you get over the purple bar, it opens you up. Whereas here we just ran into yesterday's low, sorry. And then you can see that this is the only unretraced, because this one got retraced here. So once you got over this one, the only place we would really expect some turbulence would be the unretraced portion of that purple bar. And that's pretty much exactly where they try to defend. So that is definitely where you want to take some profits, because we have no way to know. And I did. Yeah, you guys, like, I literally got in here and got out here. And then had to take a phone call. Missed this. This was beautiful. And I totally missed it. We broke over this, and I'm like, well, I can't buy it now. It's going to hit overnight low. And I was right. And so I'm like, okay, if we come back here, I'm going to buy it. And it did that. And I should have bought it. It would have been totally fine to buy it here. But I did not. And so it broke through yesterday's range. And now I'm like, okay, well, if there's any question before of whether or not it was bullish or not, it's obviously bullish. So I just need a pullback. But by the time we got a pullback, it had already hit VPOC. So it was on the 24 tick, you basically had 2 tries. Yeah, it was literally low day. And I had the frickin' line on my candlestick chart to tell me to watch for that, which is part of the reason that I got into it. But I've been watching these arrows, these yellow and green arrows, and a lot of the times, if you get box immediately followed by arrow, you get a retrace, except for when there's really strong momentum. If there's really strong momentum, you can do box, arrow, sweep, run. But usually you at least get a pause. And so I just assumed I could safely get out and get right back in again. And it just didn't happen. But I could show you a bunch of spots on the way down. So if there's momentum, box, arrow, you're likely going to rest here. And if your stop is there and you got in there, sorry, on this one, if you got in on that triangle trying to, I don't know why you would, but let's say you got in here and you put your, or maybe you trailed your stop to here and you see this, it's, unless it's really strong, it's usually time to take some profits. But if there's momentum and they take this arrow, the counter trend arrow, that zone, I'm learning, I figured this out basically today, that zone now is a great place for a retrace. And if they don't make it and reject, it's probably still not too late to get 10 points. But this is what you want, where it comes up, it rejects that, and you can get an extension. It only works when it's trending heavy. So the way, and so here, again, box, arrow, rest. It did what I expected. I just had to step away. It literally came right to the orange line where I'm supposed to be watching for trades. And I was just away from my desk because work called. They cost me a lot of money today. I had a client that needed something, and so they called me on my day off, and I couldn't really ignore it. But once he gets taken by a bar that's not pink, so once we get VPOC above him on a bar that's not pink, right there, he's trapped. That arrow bar, those sellers are trapped, and we should expect his range to act as support. So this is normally a really good entry, but I like I said, I was expecting that, but thankfully I do my homework and I knew that the low a day yesterday was going to act as resistance, so I couldn't take it. But what I should have freaking taken is this. It makes, I don't know. It's perfect, right? It's exactly how it's supposed to work. I just flaked on it. So, and then here, they run this guy too. VPOC above him, right? Because this VPOC was inside still. So VPOC above him on a bullish bar that's not pink. Now here we squeeze, so I don't know if this is going to work, but normally we'd come down to his range, and if we get a triangle up out of here without taking it back, oh, well, it could happen right the F now. So let's see if we get a triangle up. But I probably can't take it because VPOC. So sometimes it's not going to align the way you want, but that would be ideal. Hold on, my phone's going off again. Let me just leave me alone. Okay. What time is it? Ah, okay. Well, I'll do a more thorough review once we close. My only concern with getting a trade here is that our location's awful. Being in yesterday's VPOC, it's not a good idea, ever, basically. Unless the only way I could take it is if we rejected it and I was trying to do that. Then it's not so bad. But if I'm trying to trade through it, the chances that my stop gets hit and then they run is much higher. And I'm not super confident about this bounce anyway, because while we've gotten above them, we squeezed here, and look at delta. It actually went lower, which is weak. And the one with the most delta is here. Sorry, here. This one. I'll show you. They usually have a box on them right there. Once we got under that, it's more bearish than bullish if VPOC on a non-purple bar can get under it right there. So this triangle in all other situations is your better release for the reversal, had it not been for this big seller being trapped there. Normally they act as a bounce, but I'm curious to see, maybe in this case, since we actually trap buyers above, it appears they don't care that he's trapped anymore because they're just joining the party. So perhaps it's always difficult to like prioritize like which one's more important, and usually the answer is the most recent information is the most important. So until the buyers got trapped, this was a good location. But once the buyers got trapped here, you don't want to long anyway. So that's a poor location. And instead, what you want, you don't really know for sure until here. And then the only place where you really get an entry signal is here, because I generally need the triangles if I'm trying to do a reversal like this. So that would be your entry. And like I said, it's just coming into a consolidation zone, which I don't usually do. But it does kind of make sense considering that they're actually rejecting VPOC. They've trapped buyers up there. And this guy was a seller down here before. And if they do free him like this, or what I call reclaiming, like this, if he acts as resistance, this could actually accelerate. Now we could do the same thing on the 15 tick. And that was the biggest delta. Probably had a box. It did. Once you get under that, it's basically the same spot, but it was a little earlier. So purple bar above it doesn't quite do it. It's got to be a regular bar is what I found. That's bearish. And the VPOC, the yellow line, has to be under it. So right here, that's your first short. And then, oops, and then a retrace in here is good. But your stop has to go up here. So enter here, stop here. Would I have done that? Never, because of the VPOC. But I wonder, once it's cleaned it out of buy orders and you have buyer straps, can you short like this? I don't think it's a good idea, but it seemed to have worked today. Normally, very, very difficult place to trade. But like I said, when you've gotten outside of the range, returned to the range, and rejected it, I have seen it work. But it's the exception, not the rule, that's for sure. Let's see if they can trap this purple. So these purple and the yellow are strong sellers. No, not strong. They're impulsive sellers. And if you're in position, like up at the top of the channel, or in an area where you're fighting over an area, and they put these in, it's a sign that buyers are giving up, and sellers are getting more aggressive. But when it's down here, what it is usually is buyers giving up, but at the exact wrong time. They're basically giving up because liquidity got grabbed, which is just the way we all do it. The liquidity's there. It's a vicious cycle, right? They give up, and that's what kind of makes it possible for the market to release back the other direction. So what I've found is if you had a location here to be looking for a long, getting above them like this is actually a pretty good long. We'll take it. Oh shit, come here. I will go ahead and give it a try. Just to demonstrate, but I'm fighting against recent, what's it called? Trap buyers. So if this is increasing momentum and it's like screaming lower, it's not going to work. Um, but if this is a location like previous day's value area low, where you might have expected some buyers to show up, I should be able to get back to VPOC. If this doesn't work, I'm not interested in longs. Let's put it that way. My stop goes down here. If it fails, it usually fails right away because they kind of like pretended to get trapped. Now, the good news is with the 15 tick, it's a very small stop. If you want to be more, it looks like they might stop me. If you want to be more conservative and wait for the triangle to come in on the 24 tick, you will have a much higher win rate, but your risk reward sucks because of the VPOC here, the previous day's VPOC. So it doesn't really make sense to do it on the 24 tick, which might be a good reason not to take it on the 15 tick, honestly. But more out of demonstration purposes. And whenever I'm doing these streams, I'm always trading with an apex evaluation. They run so many sales. It's worth like always having one or two, just because if you run good, you could qualify another. I could qualify more PA accounts, so I don't really care if it works or not. So let's see if we can get up there, and I'll take profits if. See, the problem here is we increase momentum, so this could hold. But the VPOC should act like a magnet. So I will take some profits at 10 points if they give it to me. And then we'll see if we can take another one here. First, they got to give me 10 points, though. This is good. A good sign. Getting the box going the other direction on a turn like that. Usually you get a pullback and then a lift. Because, again, it's a sign of impulsive buying now. So somebody shorted down here and probably realized right around here that we weren't going lower. And so impulsively just bought a bunch, closing the bar bullish. Now, if they take him and put VPOC under it, it's definitely bearish. But this is a sign that this area is contested. Let's put it that way. Until we move away from him, it's ambiguous. But that's what you want to see, basically, is you need to see some buying under or at the area that you were interested. Because if the market's not interested and you're not seeing any like sellers giving up, well, you're probably not at the right location. The star down is potentially good because we could trap them, but it might also mean that there's an aggressive enough seller here that they're not going to let it lift. But if we get box and then star and then lift, it could actually lift the rest of the way rather quickly because he's going to be stuck then. But if they just take it, then it's obviously done. And I can show you later where this has worked in the past if this doesn't work. So the one reason, one other thing, how can I say this? A reason to skip this trade is that we've fallen rather quickly and the triangle entry bar was pink, and it's very common after this big drop and then a pink to get a retrace. So if I see this and I notice it, the better move is actually to wait for the next triangle. You'll get a higher entry, but you will filter out a lot of the times where this triangle printed primarily due to just like range being kind of big. It doesn't matter if there's a pink or white triangle over here, but if they give another triangle, it's a good entry. But sometimes you don't get another one, so you might miss it. But oftentimes you'll get a second one to kind of confirm that it's working. And if it's not pink, it's even better. So the pink triangle would have been right, or the triangle would have been on the pink bar. So we won't get a second entry here. In my experience, it's usually just, I don't know. It's not my signal, so it's a trade and perform signal. I've heard Simon explain it both ways. That like if the triangle's not there, there's enough evidence to skip the trade. But then in other conditions, he's like, there really should be a triangle there. I'm going to take it anyway. So yeah, I think the consensus normally is if it's not there, you don't take the trade. But I have, like, I can see, like, I can read the price action and recognize that I already wanted to be long in this zone. So I just need them to get out of here to the upside, and I would be willing to get long. I'm not going to add, but if I would have skipped this, as long as we pull back and get above this and close bar, I'm good. And oh, come on. There we go. Okay, 10 points achieved. Let's see. We want our other target at like, oh, it's too close. Eek. Okay. Yeah, I see what happened. Okay. I took it with 3, not 4. All right, so we want, ooh, they're going to go too fast and fill me. 61.50. In case they just sweep in here and reject. And then I will leave the other one as long as we can, just in case they go right through high day. But I want to, if they do reject this, it's going to be right here. I normally use 2 contracts or 4 contracts, but for some reason I only had 3 on the Dom. I didn't plan this trade out very well. I just saw it and clicked the button. But once you practice these long enough, you're just like, trade. But if I had thought about this a little bit more carefully and not been as distracted, what I would have done is seen this close, known that that's my stop, and either bought one down here on the pullback and then bought one here. That's a great way to do it. Or see this and buy 2 here is also okay. But like I said, I was kind of talking and was just like, wait, this is valid. They didn't fill me? They missed me by 1 tick. Come on. 61.50. There we go. All right, cool. So the trade is paid for one way or another. I'm not going to lose. Of course, with these Apex evaluations, giving back is almost worse than losing, because what you basically do, assuming that you have a way to make money trading, the hardest thing with the Apex evaluations is not hitting the trailing drawdown. So it hurts to give back because you've actually pushed the threshold that they do the math on to figure out how much you can give back. You've pushed that higher, yet you haven't really gotten anywhere. You haven't, if you go back to break even, for instance, you've basically just taken away like a portion of your trailing drawdown. So it's actually better to not take the trade than to let it trail you out to break even, which is totally weird and non-optimal. But in this specific situation, it's the only way that works. So if we run into like obvious sellers up here, I'm going to really have no choice but release it. But in a perfect world, if I was trading without the drawdown, the trailing drawdown, I would just leave my stop where it belongs down here, at least until I make a high, a higher low, and a higher high, and then I would trail it. So I do my executions through here. I'll show you. I think I can hide my account info. Oh shoot, I did too much. Not the number guide, just the account. Hide account ID. Yeah, so I do it through here, the rhythmic. So it'll say 0 on Sierra chart, but I don't. I trade through rhythmic. So we have one left and have a nice little profit on a new EVA. So that's cool. Relatively new. I think I bought this one whenever they started their 90% off sale. I was like, oh, okay, I'll get another one. So I would not be shocked to see them reject here, right? Because that's yesterday's VPOC. We tested over it, tested under it, came back into it. If there's sellers there, that's where they're going to take it. Now, if we can recover, do we have a blue box that we lost? Did we lose a blue box? These. If we can recover this, oh, it's this one. It's the blue one in particular. If we can recover that, it will be support. Just like this one. Oh, we never lost it. Oh, maybe we did. Let me show you. If we lost it and recovered it, I can show you, because then it probably acted as support. Lost. Recovered. Oh, we're there right now. So that's going to be support more often than not. If we give that back again and put VPOC underneath that little rectangle, I'm done with it. Doesn't mean it's definitely going lower than this swing low, but this impulse move is done. Let's put it that way. And that is very crude, but it's basically I'm looking for situations where there's low volume. It's a low volume node on a really tiny time frame, but specifically within that low volume node where we also had most of the buyers, most of the traders, most of the contracts being done on the ask. And so losing it is, the first time, is usually a sign that there's sellers in the market. But if we then recover it, like we did here, because there used to be, well, let me just see if they take us out. But because they, how can I explain this? Because they took the level earlier and it was a low volume node, when we return to it, if there's still buyers there, that's a really obvious place for them to support. Would be the spot where before the buyers impulsively bought. Usually those impulsive buyers are actually shorts covering. It's either that or breakout buyers. That's usually why you see impulsive buying. So if you had impulsive buy, like if you imagine imagine a breakout. You have a breakout, you lose the breakout level, you go lower. Then you return, overtake the breakout. Chances are, if it's bullish, they might trade under that, but they should not put much volume underneath it. So if this VPOC line goes lower than that square, we will get rid of the trade. If the VPOC line is not under rectangle, I will hold it. And if it's purple, I will hold it because that would suggest that there's like they're testing underneath it. But most like the biggest trader in that bar was actually inside of that area, and I expect them to trade there. I just don't want them to develop volume below it. It is definitely arbitrary, but you need something. Because I mean, Renko is just based on measurements, and so like I could say on the 15 tick it held, but maybe on the 8 tick it didn't. Like, it's not magic. It's just you just need something. So this is good. Testing below it, keeping the VPOC above it, and then lifting. That's exactly what I want. And if it wasn't for this VPOC being right here, and we get a triangle up, it's actually not a horrible place to add to the trade. But with the VPOC here, I'm not going to do that. And certainly if we take this low out now, it's done. Because they are responding to that low volume node. And so if sellers are so adamant to sell below VPOC, yesterday's VPOC, that they like defend that, that I'm probably on the wrong side. But for the moment, it's at least neutral. What time is it? We're running close. See, the problem is the closer you get to the close, the participants change. So these tiny little intraday tricks don't work as well because the people who never trade until the last 30 minutes of the day, they don't give a F like where the 15 tick low volume node was. Like, they just have to decide, do I want to hold my swing trades till tomorrow or not? And so while it looked like they're going to hold, if we don't, it's going to be because of the end of the day. Grr. That's okay. At least I got 2 of them off. Okay, that's purple. We'll give it a minute. They have to immediately recover this or I'm done. Because if they test down here and there's no buyers, then something's changed. That's not good. We do not want them to print a purple box. Unless they get over it, then we can start the whole damn thing over again. But considering that we rejected the VPOC, I'm not bullish if they do that. You'll see it blink on and off until they actually close. Nothing matters. Nothing's valid until they close. Yeah, they're going to take it. And I'm done. Okay, so cashed 655 in the Apex account. Now let's see if that is accurate. Like I said, I do not have as high of confidence at the end of the day that those little tricks, those trade management tricks will work. But I can find spots where they worked throughout the day. You can also think about it the other way and say, well, if they gave away a yellow box like this, we know if they recover that, it must be bearish. So it also makes sense to put your stop under that with a VPOC getting under it. So which one is better, I don't know. But you'll find if you have too many rules, you'll find all sorts of reasons to stay in a trade. So, and this is basically just a couple points above my regular stop. But this is why we take profits on the way up at profit targets, because it's not always gonna keep going. Optimal might have actually just been exiting all here, but given the range of the day, I didn't think it was too unreasonable to think if we could get back over this, it could actually squeeze. But yeah, I would not be shocked if this just holds. That would suck if this actually, I didn't see this, and Didn't think about the fact that this could actually be support as well. If they do lift it up here, that I wonder if that's a reason that they might get aggressive. Because then whoever shorted here is going to get squeezed out. So we might get like pink, pink, pink. I've never thought of that before, but you'd specifically need to have a yellow and a blue box aligned like this. And you'd have to lose both of them and then recover one, but not the other. And then recover the first one. But again, I wouldn't know that happens until up here. And then I'd be getting long right into the VPOC. But if this just like impulsively lifts, that's why. And like I said, I just never thought about it before, but like auction theory wise, it makes perfect sense. I'm not exactly sure how to like code that in because it's a pretty complicated, like deciding whether or not it was the most recent one or have we traded over it and then under it again. It's something I'd probably have to manage manually, but yeah, if it just screams higher here, I'm gonna have to look for that. That basically, if I'm trailing out, and again, my coach Simon recommends you just leave your stop here, at where it belongs, at the where you had it in the beginning, and that solves all these problems. You don't need complicated rules, but the trouble is with the apex evaluations, you're potentially costing yourself a lot. But I mean, it is just another 10 points. So, but the way to think about it, if they do just rip this out of here, is if I'm planning on exiting early and I look to my left and I see that we've beat a yellow box, I may want to wait until they trade under that yellow box with VPOC. But like I said, I would not be surprised if this just becomes support resistance, in which case I don't really care that much. Yeah, they didn't. Well, I guess they could still rip it up right here. They once again got over a purple. You can't really see it because it's transparent, but there's a purple box associated with this bar here, and we got a bar that's not pink above it. So what it's basically saying is someone impulsively sold down there, like kind of like we did, right? Like market sold, and then they traded over it. And so if that holds, if this area holds, or is defended, even if it trades under it like this and then gets defended, it is the fact that it's being defended after beating it suggests that there's more buyers and sellers in this zone. It doesn't mean it's a buy signal, but if you have a buy signal after seeing that, your win rate will improve because you've actually trapped sellers. But like we'll probably see here, sometimes you get over them and then you return to the zone, and whoever started getting active selling here goes right through the limit orders, and you'll get purple bars because all the buyers start to pull their orders, and it can cascade. All right. Back to previous day's value area low. So that's a retail location. If they bounce like perfectly like that, I would not trust it. Especially in the last 20 minutes of the day. And then this one was pink, or had a pink box. So there were a lot of aggressive buyers in there, and we've traded below it with VPOC, meaning these guys are now trapped, and you really can't be bullish unless you've recovered that or get a bigger one. So we would need even more aggressive buyers to show up at lower prices. And we'd probably need to target this zone as an exit. So, in other words, the only way buyers have a chance here is if they get above this now and hold this. If this continues to act as resistance, it's not bullish. And that's specifically because we traded under it with a non-purple bar. Because you can see here we have a pink box. They got under it with a purple bar, and it ripped, which is where we bought it, right? So if it's just a purple bar and you don't get the yellow line below it on the bar that's not purple and bearish, it's like that's sellers like exhausting. That's the right word. Whereas here, they actually got under it with a non-purple bar. So it's like a real bear bar with sellers that were negotiating price, not just buyers pulling their orders off the order book and price dropping without a whole lot of sellers coming in. Like, they sold it underneath where all the buyers were buying it. So this area was bullish, and we returned to it and got under it, and now there's actually more sellers than buyers. So I'm not going to be a buyer here, even though it's an apex trap and all those things, because this is going to be resistance until it's not. You'd have to trap a seller and do all that to get up there. So instead, my only trade option here is to short from up here. So if they do get up there and we find a seller, you could actually short it. In fact, you could even sell, you could technically sell this if you wanted to. It's really aggressive, but you're returning to that zone and rejecting it. So it's a breakdown, not usually my style, but is it going to work? Probably. But you'd have to put your stop like up here, and that kind of sucks. So what I'd prefer is missing the trade if they don't retrace. But if they retrace up here and you find sellers up there, you sell it up there. Or at least wait until the sellers show up and then sell it as it falls down after that. I personally prefer being not quite so aggressive with the breakdowns. It's just, you see the sellers get trapped so often. And it's pretty frustrating being the guy who like sold on like the second or third wave down or whatever, and then seeing them scream through your stop and be like, wait, I want to buy it. And then you miss it. So, will it probably work? Yeah, probably. But am I going to take it? Nah. Interestingly, on the higher time frame, they had big, heavy buy flows here with Delta, right? We have the pink box. And we have not yet gotten under that. So on a higher time frame, and then here too, on the 24 tick, big, heavy Delta. Oh, no, they got the VPOC under there. So on 24 tick, it's bearish. 40 tick, it's like possibly bearish, but not confirmed yet. You'd need a non-purple bar. But a purple bar doesn't mean it's bullish. It's just not confirmed bearish yet, because they could still reverse it on the bigger time frame, which is another reason to wait to short. But you might miss it because sometimes the short side, they just open the porthole and everyone pukes, right? So the only way you can catch those is one of these little wick retraces. I don't usually do that. There are times when it works. Usually, you want to see a lot of volume and have a reason for everyone to participate, like the close or the open, or after a news event, something like that. But this is the close, so it very well might work. But again, risk-reward wise, you've still got yesterday's low, which they'll probably scream through, but it would suck if you got short at 28 and then get your 10 points and then they recover at 17. Um, and you're in a trade that actually only works 35% of the time because those little wick retrace breakdowns, that's not a high win rate trade. If you look at the delta, you can see it here too, without all the added stuff. Look how they had a bunch of sellers up here, aggressive sellers, and now that aggression is kind of gone. I've added it's just a moving average, but you can actually see divergence on the moving average really clearly. So if I'll show you later, but this one was probably a divergent high, but you can see if they bounce this now, we're actually making a higher low. We would be making a higher low on delta compared to this low, the previous low, but a lower low on price, which means like it's going to be hard to keep it going, but that only applies if you bounce. So it doesn't matter what this looks like if it's just bear bar, bear bar, bear bar, bear bar. But if you're trying to decide, should I exit my short now or should I keep holding? If I saw this divergence, lower price, higher delta, less negative delta, and they close a bar up there, all it would take is probably 1, 2 max. I'd be like, I'm done. Because what it suggests is, again, exhaustion. They were more aggressive at higher prices, supposedly because they thought price was going lower, but price goes lower and they get less aggressive. Why would that be? Because we're back to fair value. Or it just needs rest. We just ran out of sellers and it needs a little rest. It does not mean it's time to buy. Do not buy because of divergence. Please, please don't do it. But it's a great time to start thinking about looking for the buy setups. But it is not a buy signal. It means there's an opportunity for a buy setup to actually work now. Because if that's not there and it's breaking down, buy setups probably won't work. Or if they do, they'll work for very brief periods of time. You will get the tiny little retracement or like the chop, 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 drop, chop, 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 drop, stuff like that. That's what you get when there is no divergence. The further we go, the bigger chance. You can see they've now put in a smaller delta than this. That's problematic if they bounce it now. But these ones were way bigger than these. And if you look at the volume waves, significantly less. Again, not bullish until we actually reverse. So it's not going to help you catch the low. But it's a great reason to trail stops and to stop taking those aggressive sells. Now, like I said, is this like probably going to be a good place to sell? Yeah, like 30% of the time it's going to do this. So, and your risk reward is okay. It's like you know, if you put your stop up here, enter down there, you got 2 to 1, right? That's okay. Am I going to take them every time they set up? No. But if you want to be aggressive and you have a target a lot farther down, it's not wrong. Oh, but if I would have taken it, like I said, the very first bull bar that prints, I know I have to be out unless they fix this divergence. So it's close, but it's still divergent. And so that would limit my expectations on that. Like if I said like, oh, I can take it because we might drop 50 points. It's like, you think it's going to drop 50 points without printing a single bull bar? Like, it happens, but not very often. So be reasonable. So right here, oh, they didn't do it. If they, well, they thought about printing a bull bar. Assuming this is still divergent, because that was a lot of selling. It's still divergent. So if they close a bull bar, I'd be out of the aggressive sell. See how it gets chop, 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 chop? But look at the, see this one on 15 was not divergent, but this clearly is. So chances that this is going to close bullish, high, is all it's basically saying. So now I'm out. If I would have been selling, I didn't take it. But if I would have been, I'd have to be out of my runners. I don't want anything to do with the sell side anymore because they've now got a confirmed divergence. Technically, this volume needs 3 blocks, three Renko bricks before it stops. So if this one's a sell, you'll see these flip to gray. It's just the way the Weiss waves work. So you can't, if you want to be really sure, you wait for 3. But then you've basically given away half your profits. So from my point of view, if I've seen 2, anywhere in here is a great place to exit. Will it sometimes keep going? Absolutely. But I'd feel pretty stupid getting into a 30% win rate trade thinking that I can get 3R, like 3 to 1. Oh, I guess it's only 2 bars and it switches. So yeah, I thought it was 3. Nope, it's 2. Yeah, I'd feel pretty stupid getting in knowing that it only works 30% of the time when I also have a plan of trailing the stop like 15 points. So like if I'm only going to exit, if my stop is initially here and my entry is here, right? And I see this and my plan is I need 3 bars. Like that's all you get. That's nowhere near your 3 to 1 that you thought you might get. But if you take one here, and then exit here or here when it starts to chop because there's divergence, that might be profitable over time. But you better trade it right. And that's one of the reasons I don't take those 30% win rate breakdowns and breakouts very often, is because you have to be really good at making decisions very fast to get out of those trades profitably on a regular basis. Because when they don't work, it hurts. And when they do work, you need to hold them. Otherwise, a 30% win rate is not going to keep you alive. So my coach hates them. And I understand why, because a ton of people try to do it and F up royally. Plus, when you can just wait for the 60% win rate trade, that is easier to manage. You can just scale bigger, into the trade that works more often than it doesn't. So, but it's frustrating for a lot of people because they see the market move 1.5%, and they had two trades with like 30 points, and it's like, oh, if I would have had a momentum trade, I could be up, $2,000 or something. And it's like, yes, but you would have had to manage it correctly, and you would have had to know to get out of it when it's not working on all the days that it doesn't do this. So, not saying it's impossible, but if it wasn't for my 60% win rate trades, like my core A+ setups, I would not be shocked if I was a break-even trader, if a losing trader. Because even though I've gotten great momentum trades, I've also gave a lot of that back trying to momentum trade in situations that it just doesn't make any sense to. Like, trying to hold through divergence or, just there's so many places to mess up. There's so many like dynamite sticks in momentum trading. But if I'm going to do it, you got to make sure, I have to make sure that I am ready and willing to get paid for the times it works. The best ones are often on gaps. So the days that the typical mean reversion 60-70% A plus trades that we do every day in TNP, the days those don't work well, the momentum trades will work. It's a matter of knowing which days those are. Whereas the days that the 60% win rate trades are paying great, someone is losing a lot of money momentum trading. And see, like I said, just because we had divergence does not mean that it's time to buy. It just means that, like, if this apex traps, it might actually lift. But it doesn't mean it has to. But there's no way I'm buying any of this, by the way. No way. Not after they got trapped up here at the location that I expected them to. I don't think... Oh, is that an apex trap? Just barely. I would not take it if it prints pink here. Although we did get the pink box, meaning that there were some impulsive buyers. Oh, there we go. This might actually work. No plus sign, though. That sucks, but... And you have this volume here. That's the time-based VPOC intraday. And all the theories are all the same as how they work on the higher time frames. So we left the area. We're coming back. What do we expect to happen? Well, find the value area of this. That line to that line, with the pink being the VPOC. And most likely, if it's bearish, there are sellers sitting in here. This will be the most likely place for them to be sitting, but they could be at a high volume area down here, or if there's a big low volume node, they might defend that. You're not necessarily going to get here, but if you do, and you find sellers, the chances that you're just going to rip right through here, not so good. What you'd prefer, if you were trying to buy this, which the algo solves for us because this is not an entry, it's missing a piece. What would you prefer? Would be for this VPOC line to shift down before the lift. That way, you're actually getting long after the sellers get trapped. But here there's no purple bars, no stars, no triangles. There's no reason to think on this time frame that you're going to get a big lift. On the smaller time frame, it says you need to get a VPOC above the last purple bar on a non-pink bar, which has not happened. So nothing to do on either one, either time frame at this point. You would need a bull bar to print on the 15 tick that's not pink and have the VPOC above this purple one. Until then, oh, the VPOC's too low. They have to shift that VPOC, that little dash. They got to shift it up. Otherwise, he's going to get trapped. Oh, yeah. They're probably screwed. So they closed it bearish. Pink bar won't count. Okay, so if this pink, they need a white one. We did get above pink, but we need to get above purple on a white bar, which has not happened. See how they finally get the VPOC up there and then they sell? You can actually, if it wasn't for divergence, you can actually sell that. But with the divergence, this low is going to get defended most of the time. So only pink. We need a white one. Oh, they got it with a plus sign. That's a good entry. On the 15 tick. That's really aggressive on the 24. Really aggressive. Doesn't mean it won't work. It's just we're going to get stuck more often than not right here. But can you get 8 points on it? Probably. But watch what happens when it hits that dotted line. Because that's where all the volume was. Again, it's not a brick wall, but we would expect sellers, if they're still interested, they're defending that level. Because that's where they all got involved. And nobody likes to lose money. We have gotten above this guy. Oh, but not with a white bar. If this turns white, and then they come back and hold this range, they might bounce it. This would have been a very aggressive entry, but you'd have to target this with your stop here. So I'd be out of the 15 tick right here. Be like, thanks for paying my fees for the day. Could it keep going? Yeah, but most of the time it won't. So they get above it. They find sellers, maybe. Ooh, too far. So we've worked off that divergence. So if sellers are here again, they can now flush freely. But see how this delta? So those are sellers covering. So that's your target if you're selling, is that. So now, if you're going to sell, you basically want to take most of your profits here and then hold a runner in case they break down. But your stop needs to go up here. And you could get in right here. I mean, it's not wrong. It's with the trend. But if they print a white bar here, you want to get the hell out of here. And again, it's super aggressive. But I bet it works. How much time is there? Oh, it's close. It's not gonna. I'm like, why isn't it moving? Oh man, that's too bad. Okay. Well, it might still work. It might still work. It's just gonna do so very slowly. I think what I'm gonna do, I'm gonna take a quick break, and then I want to first of all go over two, I think, new little patterns that I was watching that I want to just check on. Because I think I saw them all, but I want to make sure I didn't miss any. And then I can go to like investigate the open and see how we would have done like following different like what's it called, playbooks, and then try to figure out if there's any way that I can better identify how to hold in situations like we had where I let go early. So just give me 2 minutes. I'm going to go get a new drink, run to the restroom, and I'll be back. I'll just leave the screen on just in case we do get a drop, but just give me 2 minutes. I'll be right back. All right. I think I should have a good hour here. I got to keep an eye on my phone because I do have. Oh, hold on. Hold on real quick. All right. Of course, it's always as soon as I come back. All right, so let me get rid of all lines and all the rest are from the profile. Let me just see how did they, oh, they lifted it. Nice. Cool. Oh, like I said, we're probably going to chop in there for a while, make a new high volume node. The higher time frame is always interesting to watch. You got all the way up here, exhausted with the yellow. That's beautiful. Put a box at the top, double box, and yeah, that's excellent. This is resistance. I didn't see this. This is why it's good to watch the higher time frame. So that is where you want to short. 15 to 31. Oh wow, that's exactly where we damn, that's actually really nice on the higher time frame. I wasn't looking close enough. Maybe I would have taken that breakdown. Okay, and then oh wow. That's also interesting. Okay, so I'll show you why in a minute. But then in the morning, oh, this is overnight. Exhausted with yellow, that's typical. And then box, get under box. Also have to get under the last pink box. And the purple means aggressive sellers. Aggressive sellers, aggressive sellers, aggressive sellers. They get behind aggressive sellers, try to recover, but they run into these guys who got trapped. So what that means is that it started out as just this one just this one getting trapped. Technically it goes up here because in time it like closes, continues higher, can't make another one, comes down, and they print it like it opened here, but that's just the way Rinko works. So that was resistance until recovered. Then they took this one here once they got the VPOC under it. Now that's resistance. And they took this one, this box, they took it here. And so that also becomes resistance. The little ones are easier to see. And note, if it was bullish still, the yellow boxes, which is the opposite of blue, those are impulsive sellers despite the lack of volume. And he can't get fully retraced. And neither can this. Huge hint that buyers are out of the market. Or at least like not as active. What you'll see in the opposite direction is that all of the blue ones start getting retraced. Blue, fully retraced. Yellow, box, doesn't get retraced. As a result, you get a green line, which is where the resistance starts. You can see we had a green line from earlier. It acted as resistance again. And then this one actually is here. So, but I'll just extend it. On the way up, and again, this works on all the time frames, but it's just easier to show it on the bigger one. Yesterday, the low looked very similar, like it always does, where it was bearish. So in that case, the purple bars, it's especially the ones with the boxes, the yellow boxes in this case. Again, meaning impulsive selling, market selling, but a lack of volume, meaning buyers pulling orders from the order book and market selling. So they put their stop here and their stop got it. Normally, the market in a neutral market wants to come back and make sure that there are natural sellers up there. When it can't reach and produces a dot and continues lower, it's usually bearish. That can change, but look here. I forgot to check for this at the top, but even on the higher time frame, it's actually more meaningful on the higher time frame. We have divergence at the low twice here, and then they make another lower low on price. But this little moving average makes a higher low, and you can just see it in delta. The little shaded areas is just, it's a raw signal. I've already gotten rid of it on this time frame, but not on this one. I will eventually. You don't need it. It's just something I have to refer to make other signals, but it's volume related. So at the low yesterday, on the higher time frame, what we see is divergence, right? In delta, meaning that the biggest delta came in over here. And if you look, there's no purple boxes anywhere. There's pink, but no purple at the low, meaning there weren't new aggressive sellers coming in with volume, right? So the aggressive sellers that did come in, the star, those are aggressive as well. They didn't produce very much delta relatively to what's going on both sides. That's not bullish, but you can't sustain a move without delta. You need to get more aggressive to push, because if you think about it, eventually if you go to the left, right, far enough to the left, you'll run into traders that are places where traders either used to be doing business or no one's done business there for a long time and someone thinks it's a valuable place to be putting orders in. And so what you end up getting is more volume passively, absorption, right? So as the aggressive sellers hit the market sell button, the market doesn't move as much because there's buyers on the limit order book sucking up those orders. Again, that's not bullish until it actually traps sellers. You can have absorption and go lower, but to do that, you need more aggressive sellers, because if you don't have people hitting market sell and there's more and more orders, buy orders on the limit order book, sellers are going to stop selling. Nobody wants to sell when they see more and more buyers going onto the order book and they hit sell and it doesn't move, right? An iceberg or whatever. Nobody wants that if you're trying to sell at the low. So if you're pushing to new lows and delta is exhausting like this, and again, I've got it signaled as the normal way to do it is you'll see the purple boxes, okay, and that is a sign. And again, I can tell you this because it's my own signal. I don't have the code for this one for Simon's. I can't tell you what all those things mean, but for the ones that I developed and added to that, I can share a little bit more. So the boxes are saying there's big relative delta there. It's not bullish or bearish until we see how the market responds to it. But you can't stay bearish if you get them up here and you don't get them down here. The pink is exactly the opposite. I can't use erase lines because I was adding some stuff. I guess I could lock them. The pink is the opposite. So if you look, the delta's down here. The really big shifts in delta are going to get pink boxes next to those bars. So we should expect, if it's bearish, if it's been bearish, and you close basically even one bar bullish, you must have had some delta, because if there's momentum, people put orders on the order book to sell, and to eat those, you need buy orders that are market bought. So if you suddenly see price reverse when there's been momentum to the sell side, chances are what you should see is a spike in buy delta. So it's not always bullish. You can see there was one on this bar, and they're printed to the right, so it doesn't cover up the low, because I also have other signals there. So there was buyers coming in there. We don't know why, right? It could be a location or whatever. It doesn't matter. But if they can't follow through on that and hold it, that zone, and we trade under it with a VPOC on a bar that's not purple, a bearish bar, right? Because the purple bars, again, are price moving because people are pulling orders from the order book. We want actual selling, not just buyers disappearing. We want a fight that sellers win for at least whatever the tick chart is. This is the 40 tick. We can do it anywhere we want. Thankfully, the theory is fractal. So once we've gotten under the pink bar, that zone is now resistance. And to get through it, most likely, they're going to need another pink box, first of all, because you're going to need a bit of delta to overcome the new sellers that have added to the order book. Where's our race last? Here we go. So you're going to get, oh, I guess I did that in the wrong order. So this is going to be resistance. And again, if you test up there and give it up, this guy's trapped. So he aggressively sells. That's why you get the box here, right? They trap a buyer. He aggressively sells. You got a star in it too, so really strong bar. They come back up. This stuck seller is, sorry, stuck buyer is now a seller. And we can't recapture or reclaim the zone of where, oh, I did it on the wrong one. It's the buy bar, this one. We can't reclaim that range, and it rejects, meaning it's still bearish. So we got this one, pink. They tested over it, but only with pink bars. So some sellers gave up, like, I don't want to be a seller anymore, but no one followed them. Nobody, not enough buyers. There wasn't a big enough fight to create a regular white bar. So even though they got VPOC up there, it doesn't, we don't really count it as like a sentiment shift. And another aggressive seller comes in here. If you're gonna momentum trade, a very easy way to do it is the star on an apex drop that comes after a pink bar, and especially after a triangle in the other direction, just like that. Particularly if you have a reason to think that this might be resistance, which we do, because this guy, this buyer, we can just say it's one, even though it's a lot. This buyer got trapped, and we've returned to his range, primarily his VPOC. And there's no aggressive buying above that. There's just selling. And the moment you give it up and confirm that you've given up, that level is a good place to sell. So the star or the retrace. Oh, and then you put your stop up here. So the star here, we know it's valid when it prints, or the retrace on these purple bars are great places to sell if you're momentum trading. So then this pink bar, I guess I have to do the other one first. I'll just start over. Here we go. So this one, they couldn't get over it. He gets trapped. So to be bullish, like I said, you need to have new buyers, basically, a flood of buyers, and or trap sellers. So once we get under the sellers, once we get under the buyer, we should assume that this area is going to be like it's going to be resistance, especially on the first test back. Well, we get new buyers, pink, right here. So we can do the whole thing again and say, okay, someone's buying aggressively for one reason or another. We also have divergence. It might work. It's got a chance to work, basically. Because, again, the sellers are actually exhausting a little bit. More so here, when it gets smaller and smaller into the low. But this one, the big delta, is actually the last bar right here. And they get over him, and you get a box. So that's pretty aggressive. Like, someone is trying to trap him. So if he gets defended, if we can't get a VPOC below it, well, then we can assume that buyers are present. Whereas here, they were present for a moment, but there was no follow through, and we returned to their zone, and sellers were there again. Well, here, they buy. We get into the trap buyer. He sells. But then if you look very closely on this sell bar that's not purple, the VPOC is not below the low of the box. See that? It's on it, but it's not below it. So most of the volume was actually done within his range. They're fighting over it. It's not purple. There was a real fight there. And most of the volume was done inside his range. As a result, people buy again. And there's big buy flows, which is the arrow. And not surprisingly, when they lift after that for another bar, they're able to take back or reclaim this trap buyer. Not at first. See how they can't get the VPOC above them? Sellers do a last defense trying to shift back down. But now, unlike before, because we have these new absorbing aggressive buyers, they are buying the market. So did you know that it was the low here? No. But did you have a pretty good sense that this area was a better potential entry compared to like this one? Yeah. Because we had a buyer that didn't get trapped. And we returned to his range without trapping him, putting in more buyers below him. It's a show of confidence. And then where you know it's bullish is when you start trapping sellers. So here there weren't really any big sellers trapped at the low. There's the delta, but not huge ones. But what happens is, like I said, they aggressively try to sell, and it makes sense. It worked before, right? He showed up, that star bar showed up here, and so he shows up again. That makes sense. But once we've recovered one of these trapped buyers, they were trapped here. Once we get VPOC above it on a non-pink bar, which happens there, not surprisingly, it's got a bunch of algo signals because a lot of people had to aggressively buy to make that happen. Once that occurs, now we can be quite confident that these buyers are getting supported and follow through. And so now this is probably support. So this triangle is really strong. Very high win rate there. Particularly because we've also gotten above an increase in sell delta. So here, on that purple bar with the yellow box, there's a purple box. It's kind of hiding. But what happened there is sellers tried to increase delta relative to like what has been happening. They know when they see this that this is their only chance to continue lower. Otherwise, the cells that they have higher up are going to need to be pulled from the market because it's no longer bearish. So they try one last time to aggressively sell. And it only gets a purple bar and it gets no follow through. Why? Because they got trapped back here. And I'll show you where. These purple bars here that acted as, it was basically buyers pulling their orders. They weren't confident at that point. The buyers during purple bars are not confident and they pull their orders, and sellers have an easy time moving the market. Well, we got above them with VPOC on a bull bar that wasn't purple. So there's confident buyers aggressively buying at a price that's higher than a point where earlier there was a lack of confident buyers. That is not a reason to buy, but when their range holds on a pullback, you're basically, the sentiment has shifted. You're doing the exact opposite of what you were seeing here, where the pink bars were the resistance and we couldn't get over them. Oops. Now it's the purple bars that are support. It's not always going to stay that way, and we have to be aware of what happens if that changes. But if they put in purple bars in general, and we're lifting over them, putting VPOCs above their high, and then on a pullback, their range is holding, it's not bearish. That's the most important thing to understand. If you know nothing about the algo, just recognize that that pattern exists for pretty much every one of the signals. Is that if you see a signal result in something, like if you see a star result in continuation, if that's bearish, getting a VPOC above a bar that looks the same on a bar that's not pink but closed bullish, which happened here, there's a change. So again, we have ways to get long earlier, but the real point where you can be confident that you should stop selling and start looking for buy orders, and you can be more aggressive with your buying rather than waiting for like a pullback and confirmation and all that stuff. Once you've gotten some of these guys trapped, purple bars, stars, triangles, same thing. It doesn't really matter. But a bar type that was having a reaction of things falling, and now we've gotten over it, specifically with volume. We need to get aggressive buy volume above it, preferably something like a triangle or a non-pink bar for sure. An arrow is good, right? Like anything that shows aggression is a great sign, but it must have most of the volume above it. It doesn't mean it has to go higher, but there's a chance it can go higher. The chance increases. And you can see the change in price action all of a sudden, where the sellers have a hard time pushing the market, whereas before they were easily selling at resistance, taking out support. Selling at resistance, taking out support. Selling at resistance, they're buying at support. Selling at resistance, buying at support. It's contracting and consolidating for a reason, because sellers are trapped underneath and there's new buyers with more confidence, but the buyers have been scorned in the past. And they're going to be very careful with when and where they execute. So, like I showed at the end of the day, if we have one of these blue boxes and they were beat, like I said, this is a pattern, right? You can see this over and over again. It doesn't really matter which bar type you do, but some of them work better than others. So that's a blue box that got beat. This is a blue box that got beat. VPOC below it on a bar that closed bearish, and it's not purple, right? Those areas, again, were impulsive buyers. People like grabbing liquidity usually. Impulsive buyers with a lack of volume. So the majority of those contracts moved on the ask, but they weren't, you didn't see a big, you didn't see any follow through, right? Which is what you see a lot if you watch the DOM, or you just watch anything really. You'll see that you get to resistance, you'll get all of a sudden buyer or sellers pulling their orders. You'll get impulsive buying as they hit their stop losses and grab liquidity. But if there's no volume there, what happens? The sellers come back in and price rejects. And then that area becomes resistance, etc. And like I said, if you get a breakout that then gets lost, but later you recover that zone and you put volume above that breakout point, if then price later returns to that zone of where the breakout was and it holds and it's not able to put volume underneath it, that is clear evidence that you have developed volume higher. It's not always a reason to get in, but it's a real good reason not to sell. So we can see that on any time frame. And so here we have impulsive buyers, weak volume, probably because sellers put their stop here. But there weren't any buyers to follow through. So what happens when we get price underneath their low? They aggressively sell. I think that might be a trade setup pattern that repeats, possibly. Yeah. Particularly if you find the boxes going in the opposite direction of the trend and located in the correct place. What I call at location, or not out of location. In position. Location has to do with the chart, the bigger chart, like volume area low, not at yesterday's VPOC. But in position basically means where I expect them to have success, and out of position is where I expect the bar to normally not work very well. So in a neutral market, it'll be easier to find this in a smaller time frame. We could do this anywhere. But if I go to the 24 tick and I find a period of time where it's neutral, you're going to see the Keltner channels will flatten out. It wasn't neutral for very long today. This is probably as neutral as we're going to get. It was a pretty rangy day. So in a neutral market, the channel will start to flatten out. And what you'll usually find is the sellers are in position at the top of the channel or above the channel, and out of position if below the channel or at the bottom of the channel. Now here you can see that it's more bearish than bullish, because even the out of position squares. I'll call the yellow and blue ones squares and the purple and pink ones boxes if I can remember, so it's not too confusing. But if it was when it's truly neutral, see, this is also probably bearish because he's having success despite being out of position. But once it's neutral, the out of position liquidity grabs, the low volume, high delta, it's not necessarily like delta spike, but we'll just say higher delta than I would expect. If they're out of position and it's neutral, getting over them, especially aggressively, can lead to sweep to the other side. Whereas if they are in position, what we have basically is buyers running out of energy and pulling their orders, resulting in low volume basically and increase in sell delta versus what I would expect. Again, I'm not going to go into the exacts. It's not a spike like the purple and pink, but it's just more than you'd think. So when that happens, when the boxes are in position, you'll usually get to sweep to the other side. So in position, sweep to the other side. Out of position, get over him, sweep to the other side. If it's neutral. If it's not neutral, I'd show you blue ones, but oh, here, in position. I didn't see it because of the VPOP. In position, right, bottom of the channel, sweep to the other side. Out of position, kind of, right? It's not right at the high, but more or less out of position. Doesn't mean it's immediately going to sell, but you get under him, sweep to the other side. The difference when it's trending is, and I'll get to the point here in a minute, this actually turns into what I'm finding is actually a pretty reliable scalp technique. And it works on the higher time frame to signal sentiment changes. So it's a really cool setup. But I think it's helpful to understand why rather than just giving you the pattern. So when it's bearish, even if the the yellow square or the blue square, even though the yellow square is out of position at the bottom of the channel or even below the channel, because there's momentum and trap buyers in this case, we're not able to retrace their range, which is what you would expect would happen if they were out of position. And in this case, they almost always try, but they can't retrace it. Here, they don't even try. They just keep dropping. That is usually capitulation. It's like, it's either capitulation or like frenzy. It's either the beginning or the end of the trend. Then you get one way out of position and he gets retraced. And how he gets retraced is interesting. He gets retraced by a pink box, delta, big spike, plus buy flows, blue arrow, coming in. You can see the buy flows by themselves, even if they have a pink box with a lot of delta, doesn't always result in a lift. It's not that simple. But if you had impulsive selling out of position, way out of position, followed by high volume impulsive buying, aggressive buying, I could say, and buy flows coming in, especially if that's followed by another bar that gets the VPOC above, whoops, another one, above the out of position impulsive seller. This bar by itself has okay risk reward. That just 2-bar combo, yellow square down, followed by pink square up, especially if it's got an aggressive signal like a star or a X or a arrow. It's okay. Maybe 50% of the time they work. If you get the triangle and it's not pink in this situation, and the VPOC is in that case above the trapped impulsive seller, that works a ton. So on pretty much any time frame. And once you get that trapped seller, impulsive seller down there, once he's been trapped, now what we should expect is neutral, or an attempt to return to neutral markets. So now the blue square in position, sorry about the jet, is actually a spot to add for a sweep across. This guy's in the middle. That's pretty hard to know what to do with that, except for if we trap him, it's obviously very bullish. But then this one too is in the middle. And even though you got follow through, the VPOC is not lifting. And we've got this guy to the left of us. This is going to create chop until you get out of here. Because look, it's liquidity grab, close lower. Liquidity grab, close higher. It's just going to chop in here. Liquidity grab. And now they got under it with VPOC. Not surprisingly, we get a big delta to the sell side when you get volume underneath this liquidity grab. Because if it was bullish, this would lift. So getting under it suggests maybe it's not bullish. Then you get purple square, purple box, followed by pink box. Super strong because you've got an aggressive, impulsive seller met with an aggressive, impulsive buyer. And specifically, it's strong when it's in position for the second box, the second square. So if you see purple followed by pink and you're at the bottom of the channel, super strong. Pink followed by purple at the top of the channel or at resistance, super strong. Also, pink, if this had purple or even yellow during a trend, pretty much anywhere, also strong. And what's interesting is while it's best for them to be right next to each other like this, purple, pink, you are usually going to resistance in this situation with that setup. The problem here is resistance. Remember, this guy got trapped. So resistance is this. And we have not cleared it yet. So that's why it gets stuck. So when it doesn't quote unquote work, it's because you have no risk reward. You can't put your stop down here and enter here and expect to get here. It doesn't work like that. It's not a sign that we're at the low. It's a scalp to resistance. Well, that's pretty much what it did. And it probably could have gone a little further if it wouldn't have given us an out of position blue box there. Because that one is in the middle. It's definitely not at the low. And he gets beat by big flow. Well, we saw that in reverse over here. And once we got the next bar with the VPOC behind the trapped one, we got a sweep. This one's purple, so it's a little bit dangerous, but even just this 2-bar combo in position, assuming you're not betting a trend, as we'll demonstrate later, that alone is probably going to take you to support or lower. So out of position boxes or squares of either kind can create opportunities for reversals, at least on the short term. So you almost always have an opportunity when there's two right next to each other. It's just a question of where you are located on the range of where we've been recently. Let me hide the drawings real quick. So purple, remember they are associated with the bar to the left of it. So purple, immediately followed by square, pink box, and that pink one had big flows. It's probably going to lift to resistance. Where's resistance? Wherever we got trapped, because it's bearish. This was a pink bar. They traded under it with VPOC. That bar, that range, is where the buyers are trapped. This is your resistance. And that's exactly where you go. And they help you by putting in this blue one out of position and then beating it. Blue out of position, or at least not where we want it, down here where it belongs. It's in the middle. And the very next bar gets VPOC below it on a bear bar, and it's got a purple. Is that going to be the high? Not always. Sometimes you'll get this little liquidity grab first. So you can't take a 1-bar stop and short this and put a stop here, especially to the short side. Super dangerous. But if you get this blue, purple, and you're at the top of the range at resistance, basically, it's probably going lower, assuming you got under the first one or behind the first one with volume. The one exception is if it's pink or purple at the entry, then you probably want to wait one more bar. But if you get under or behind the box, it's already probably trapped. And now you just need a sign that sellers are there. And the purple is certainly that. Otherwise, triangle confirms. But here, if you could already tell that you're bearish, you could probably just get in on this pullback. Or even just right here is fine. But then your stop really belongs up here. But it's probably like wherever the, like here-ish. 1 bar behind that one, your entry, is usually where it goes. Once you've gotten the triangle, if you enter there or on the pullback, your stop goes here. But before you get the triangle, it is dangerous to put it right behind. You could definitely get that little spring, whatever that, like this sweep and go or whatever. That's, and if it happens, if you do put your stop right here, and then you get test fail, that's, you have to get in. If I notice that, that's probably your best entry you're going to get for a while. Okay, so talked about that. Let's see. Trying to show some examples of where this is useful. Okay. So in other words, even if it's bullish and you get a bull bar with a box or a square, I know that if I get volume under that, I have to not be long. It doesn't have to reverse all the way, but it's at least resting. And then when I put another one, well, now my point of no return is there. And then this one is divergent, and it's got a purple bar. So pink, followed immediately by purple, probably bearish. And if volume gets under this, it's confirmed. A little late, but confirmed. So if you know the direction, doesn't matter what day we go to, but in a situation where you know the direction, like this morning, might have identified. Well, if you don't know the direction, it can help you with that too, because as you're going up, so look, let's say you're trading pre-market. I already talked about trapped square followed by box with an aggressive signal and or triangle is good, right? Getting over these other box squares, I'll call these squares, especially when they have the line on them, but squares, getting over them is a sign of, oh, with VPOC, so the next one on a bar that's not pink or purple is a sign that this area is probably going to be support. So pullbacks that hold that and give you, usually it's, you want like a triangle or star or something like that. That's probably a good entry. But if it's a box that shows up here, the cool thing is I now know that if price falls, or if volume, the yellow line, falls through this on anything but a purple bar, I can get out. So if I got in here with a stop here and we go higher and I take some profits here, keep going, and we print that pink box or this pink box, I can move my stop basically here because, and maybe closer, because if we get that VPOC underneath either one of those, it's gonna not be very bullish. So for the moment, I might put my stop here just to be sure that I don't get swept out on like a purple bar or a wick. But if I see that close underneath there, purple. So that's not a loss. They actually defended that. That is bullish for the time being. But there's a purple one here in position. It's technically neutral until we get VPOC above that. And that's another one. So now it's neutral till we get, oh, did we get VPOC below pink? So I'm out, right? So I could get in here at 40 and get out with my runner at 65. And I'm confident that this is at least going to rest. Now, can it apex trap and continue higher? Yeah, definitely. But in this case, I really can't be confident that I'm bullish unless I get behind that purple. But if you look over here, oh, we did not. So we didn't get a bearish VPOC. Oh, yes, we did. So if we recover this, that will be support. So I might be able to get in again if it goes up, pulls back and holds. Instead, it just rejects, which is perfect for me. So here we've made lower highs and lower lows. And I've got a yellow box. And I'm under purple and under a pink with VPOC. If I think it's bearish, I don't need necessarily to be at the top of the channel to take a trade here. The problem is I need risk reward. So if I wanted to get in right here and I thought it was bearish, I could. But if they turn it like that, I need to be ready to be out because we are at support. So It's better when they show up at the top if you're going to take them as an entry signal. But if you lose one and recover it, it can be support or resistance. That's one thing to know. And then here you're bullish. Purple, pink, follow through. Problem, I have a trapped buyer. So that's why you'd skip that, because that's what's going to happen. Even if you did take it, blew out of position, sell flows, sell, right? So you can just scalp back and forth. Will you have an 80% win rate? No. Will you trade a lot? Yeah. For instance, today, I took 28 trades in one and 10 in the other. The 28 is with micros. That's my PA that I was using. But the win rate was, but made money. I mean, it's okay. But you can see that the commissions are really hefty on the micros, which sucks. So I'm learning to scalp back and forth like this and try to use these squares to better help me know where location is. But it is a lot of trading. So again, once it starts moving, and I know the direction, what I was going to say is two things, actually, before I forget. Is if you get one in the direction that you're going and you already know it's bearish and you're out of position like this, you're under the channel, it's kind of dangerous just to take the entry right there, because a lot of times you get this and it's not bearish anymore, or this. Sometimes you get capitulation. So one thing you can do, or one thing I've done, is once I see it, rather than just entering, I mark the location, I wait for them to come back, and I enter here on the pullback with a stop here. It's only going to work as a momentum trade, but I should know within one bar or two whether or not this is holding. Sometimes you do get a little bit behind this, especially on a pink bar or purple bar. So you have to be a little careful with your stop. It really belongs up here, but I would prefer to just wait for the next one if they pull back too far. But I'm usually not getting in right here. I'm waiting until they at least try to reverse it and maybe get in here. But if they then print and come back up through that, I'm usually just letting it go. Even though I know sometimes it's going to go pink bar, roll over. The further away I am from the channel, the more likely I am to do that. But if the very next bar has a wick and a purple or pink box in the direction I'm going, I can just enter. Because now, if you think about what that's saying, it's saying there was no volume, but all the volume was done on the bid, selling, market selling. And then we went lower with more aggression to the sell side and more volume. So if this had it needs a little wick like this, but if we get a wick and then we go lower, like that's as good as a breakdown. But it, like I said, it's specifically when you've got the yellow. I prefer to have a dot here, like this. The dot with the box, when it's bearish, is really good. And if you look back here, they don't always work. I can definitely find some that won't. But if you know the direction, or you wait for location, it'll help. Let me find some. Like I said, they don't show up that often, but when they do, they're good. Or box and then dot, also good, if you know the direction. Sometimes you're going to get an immediate reversal, but a lot of times it'll work. But you want the dot to be, the key is the dot needs to be in the range of the box. So here, very good. Here, oh, no dot. Still works though because it's square box, same direction. That's also pretty good. And then if you look, even though they're not right next to each other, square, box. I already had a dot, but even if it didn't, momentum trade. So square with a box across from it in the same direction, or box with a dot across from it in the same direction. So box, a little bit dangerous because it looks kind of bullish. If we get a dot in the same location, and we haven't put VPOC above that, probably pretty good. Getting a box after that, even better. And then box, oops, box, how do I, so there's a box, right? If I think it's bearish, watch the location, the range for a yellow dot right there. So, is it always going to give me huge moves? No, there's another one, right? But my stop can go above the box, generally. It won't work counter trend. So if you have pink, and you wait for a blue, there's two pinks, so, and you wait for blue dots, it's got to be in the range right here. Wah, wah, wah. Right? Because you're fighting trend. And those pink boxes, well, one of them got beat right here with the VPOC below it. So now that's resistance. It's the last place you should be buying. So if you don't understand that, you're going to get absolutely crushed. But once you do understand it, the other thing that works is break under pink. Don't print any more pink, and get a yellow dot instead of a blue across from that pink bar, because that's resistance now, right? Once you get a pink, you want to be careful up here. But that's probably a good place to sell if it's bearish. Purple is the same way. If you get a blue, if you can get over it and you get a blue, it won't happen here because we're bearish. It won't happen here. So I'll just mark them and we'll see what happens. So box, bearish, dot, right? I've not beaten it. Box, bearish, no dot. That one doesn't set up yet. Pink. We have to wait until it gets beat. So I'm not taking this. I'm not going to take it coming into an unbeat pink. I'm not selling into a pink bar. Will it work sometimes? Yes. If it's bullish, that's an entry. Pink, blue in the pink's range, and pink's not been beat, it's not bullish. It's going to fail. A lot. So this is very, very important that you know the direction. It's not the first pink. It's once you start to have it going up. But since it's bearish, I can probably also sell yellow dots in this area. No, I didn't get them. Right here. I've beat it. So now a yellow dot in the pink bar's range is a decent short for continuation. Didn't get it. We've reclaimed the blue, which means now I can take blue dots for a buy. And if it's neutral, and we don't get over that, I can take yellow dots in that range. As long as I don't get over a box that's purple. Because right now it's just going to chop between the two. It comes up here. It gives me another purple box. That's pretty good. It's not a dot, but it's close. There's a dot. So that's sellable if I think it's still bearish. If I get a blue dot down here, I don't want to buy because this pink one got beat. So probably can sell that too. Because even though the dot's up here, the bar is in the range of the beat pink bar. So am I buying that? No. Am I selling that? Yeah. Right? It works. A lot. If you do it right. So again, we have not beat a purple. So I can stretch this out. Whoops, I forgot I got to do it the other way. Oh my gosh. Okay, so we're underneath this, right? Until we get another pink and get over it, that's resistance. This would also potentially be resistance. All of the yellow dots are sells. Okay, purple on a divergent bar. And then pink. Are we bullish or bearish? We're bearish, right? So unless we get a VPOC above this, I'm not looking to buy. And then we put another purple here. So even if we did beat one of them, this one, if you said, oh, there's a VPOC above that, well, now we got another purple. So now it can be bearish again. So if it was bullish for one bar, it just didn't set up. But since it got a pink, that means if there's yellow dots to the right, I can sell. Okay, am I buying this? Nope. Yellow dot. So you could technically sell that. And that one would stop. Eventually you're going to be wrong, right? Because the momentum will end. So now, have I gotten above the purple? No. So I can't be buying with momentum. I could buy other ways. There's other ways. For instance, yellow at the bottom got beat, bullish. So that'd probably be a reason not to sell the yellow. But if you just use, it's easier to explain with just one at a time. So that makes it bullish. And now we've gotten blue, yellow line on a bull bar above purple, clearly. We actually did it here, but then they printed another purple, and oh, they didn't beat the pink. I missed this. So look, this actually did get bullish. This is sneaky. So purple got beat, potentially bullish, needs a setup. As long as they don't take this out, reclaim it with a non-purple bar with VPOC underneath it, it's technically still bullish, right? They just have to stabilize that area. Then the very next bar, right there, gets pink. And we did not get VPOC below its low on a bear bar, except for a purple, which doesn't count. So we would no longer be selling yellows. We would now be buying blues in either one of these ranges. I missed that. So this is a blue that had the bar in the range, and this is also a buy. Then we beat this purple one. So blues in here are buys. Now, there's also the trapped buyer. That's our target. Oh, we haven't beaten that. Don't buy that one. It goes right into our target, right? Yellow at the top, probably bearish, but we have to get underneath the pink to be sure. So now it's starting to look neutral, and the momentum strategy might stop working. But we do have purple beat, so if we got a blue here, it's technically a buy if it's bullish. Purple. Everything starts over. Now we're below purple. And the pink got beat. So now we're looking for yellow dots in one of these ranges. Oh, they put in another purple and another purple. So technically it got beat here, so that yellow dot does not give you anything. They beat the purple right there. That was pink. This was purple. This was purple. So since they beat a purple and we're above pink, blue dots in this range can be bought. That's a blue dot. There you go. So it's a little bit complicated when it's not clearly unidirectional. Hold on. It's confusing if it's not unidirectional, but it does still work. It's just that you need to know where your target is. So like here, we have not yet gotten underneath a pink, and there's no new purple. So there's, from this point of view, there's no reason to sell. But if we get under this, then we could sell this range if it's yellow. See, we did not take the pink out, so I would not usually sell that. And now we've got a purple, and we beat it. So now if I get a, oh yeah, but I beat a pink. So now this is bearish, and this is bullish. So this is going to start to chop most likely. We need to get above this. What we want is to be above both purple, the most recent purple, and the most recent pink. Then the range will be susceptible to follow through. So here, it's technically bearish, right? Because you got underneath pink, but you got over purple, so your target's here. Doesn't make a lot of sense to take it. Doesn't mean it doesn't work. It's just you'd have to have a bigger picture to identify that it's bearish, since we got above a purple. So that one you just miss. But now it's bearish. So now any yellow dots in the range of a purple bar, as long as they don't get beat, could be a continuation short. Here it's gonna. So it never triggered, but now we have pink, and the VPOC got above purple. Now blue dots are buys. Where's our target? Back to wherever the trap buyer is, which is here. So this is our target. So blue dot, all buys. Hit our target. And then how long will we be bullish? Until this breaks down with VPOC. So we're not selling that yellow. Hopefully that makes sense. We're buying blue there. And we're not a seller here either, because we're above both purple and pink. So we can't be a seller on a higher time frame. We could scalp if we have a big enough range in between those pink and purple boxes, but generally we're just waiting for them to return to where the purple is trapped and the pink is stabilized to see if we can get blue. And there we go, blue dot. So buy again. Remember, we already got out of the first one at the target. This one gets to the other side of the target. Probably. We still have not gotten above this trapped pink. We need a VPOC above it to shift, to like go into like straight on like bull frenzy mode. And then we got to watch out for pinks and purples. Okay, purple. So we're no longer thinking bullish unless we can get over that. But pink has not been broken. So we could be buyers down here targeting this. Purple again. Most likely. Bearish from up here. But again, we have to break pink to be sure, because right now it's in between, so it's not a lot to do. We wait. This is technically a yellow inside of the range when you're bearish. It's not wrong. It's just a little dangerous because you're right into right into support. So I wouldn't do it, but technically, by the book, it if you think it could go lower, you could do it. But we hold pink. We do not get a VPOC below it. It gets close, but it doesn't. And we get the blue dot. So that's technically a buy. But the target, again, is purple. So stop goes here, target goes here. I don't know if it's worth doing, but it's technically bullish. Again, I'm not going to take that here because I haven't yet broken pink. Okay, so that if you would have taken that small buy for some reason, it stops here. And now we're bearish from that area until we get a pink one. There's the pink again right away. So no longer bearish from that area, but he is trapped. So if we get a blue dot down here, it's bullish. Get back in. There's another pink. Blue. Right? Blue. So once you know your direction, it's just a matter of waiting for the right location. And so all of these are technically entries until you get a purple. So there's the purple. It's a divergent bar, so it's at the high. Technically, only bearish if we get under that. But it would be yellow in that range, and that counts. Because now, if you think about it, this is the range. The bar closes here inside of the range of a bar that's purple. And we're targeting a bar that's pink or purple trapped, whichever one comes first. So do you have great risk reward? No, but it's tradable. Another purple, good sign. If I get a pullback and a yellow dot, that's another trade. Okay, it gets into our trapped purple target and lifts. And again, the stop would go up here for the runners if you wanted to keep them. And if I got a dot here, I could technically add back. And it looks like they're going to stop out the runners. But again, it should be pretty clear here that this is no longer bearish, right? Oh, I'm wrong. We got purple beat. We don't want to be selling here. That's right. I forgot. So now it's bullish, clearly, because we got purple beat. So as long as we don't get VPOC on a non-purple bar underneath this, which we do not, we're looking for buy signals. The easiest one is a blue dot, but there are others, right? But the easiest way would be a blue dot. And that just doesn't set up there, and that happens. And especially if you only have one setup, right? Like you're gonna get a couple and then you'll wait. But again, it's still no purple, so he's still trapped. And if we get a blue dot here, we can get a lift. I mean, that one's great, but it's not what I said, so we'll wait. But that's definitely another bullish signal. Let's see if we get the actual blue dot. Still no purple box. Oh, there's our purple box. Ah, we can't get lower than it, so nothing to do here. We beat the purple, but no blue dot. Again, the green actually works too, but the blue dot's better. The green, you really need a triangle to follow it, but okay, this blue, is it across from a, oh, I guess it just misses by the way I said it. All right, so pink. As long as we don't get under there, it's bullish, and we get a pullback and a blue dot, we could add or buy. If we get a VPOC under it, we have to be looking for sells potentially, but our target would be the trap purple. Okay, we can only get under with purple, so it's still bullish. Again, that's actually a great signal, but I said blue dot, so let's wait. See, it's not bearish, so I'm not taking that. Blue dot. That'd be your entry. Pink, pink, blue dot. And now you could get a blue dot even if it was just on there. So you get those. Purple. Do we go lower? Yep. So if we come back into here, you could get a yellow dot. Technically, just with the arrow, it's... Well, the problem is you're targeting this because there's no buyers trapped. That's the problem with doing this counter trend. Like I explained before, this really only works with the trend. So here, your target is literally this because it's not bearish. Oh, it's not bearish unless we trade under this with VPOC. We have to get volume below it on a non-purple bar. It's going to be rare. And that's a buy. And that's a buy too. And yeah. That's a buy, I think. See, it'd be hard to do it because you've got this purple bar sitting here. But if we got the VPOC above, yep. So that's technically a buy as well. Scary, but technically says bullish. Okay, we need VPOC below here to switch. Nope, blue. Buy. And that's a purple bar. That's a VPOC below. So now we've lost a pink, which means yellow dots here could be a sell. This one we missed because we didn't know till here. But we've got this guy trapped. So our target is this, which we basically are already at. If we can get under him or another purple bar, we could go lower. But for now, it's probably not going to set up. If we got a yellow dot right here, we could scalp it back down. Otherwise, we have to reclaim this or get a pink. No, pinks don't count for reclaiming. We have to wait. There's a pink box. So now blue dots in that range are good. Lose it, and it's the opposite. They lost it. Purple. We talked about this before. The two boxes next to each other. All we need to do is get VPOC below this, and it's a sell. And they don't do it. Blue dot, bullish. Buy. Ridiculous, but it works. Because they did not get VPOC below this. They tried. They got price below it, but they didn't get any volume, and they lifted. Still have not beat pink, so we're not selling yellow dots. We're not looking for the high. That's a buy. I don't know if that one's going to work. Because now, look, we have divergence. So, probably going to fail. Nope. Keeps going. So, I mean, are there stops? Yeah. But, like, it's straightforward enough that, like, if what you were looking for is a momentum system, and you're just like, I miss this, and I know it's bullish, but I don't know where to buy it. The easiest way that I've found, other than like waiting for the apex traps, which do happen, it doesn't quite reach. See, that's what usually happens there. This, I don't even have to wait for the triangle because I know it's bullish. That's a great entry. You don't get them very often. That's a great entry. Otherwise, they doesn't reach, doesn't set up. And the pullbacks are shallow. So instead, the way I do it is using delta. We can just say, as long as we're trading above purple and pink, we have big sell deltas and big buy deltas below us. Pullbacks into their range that reverse are generally going to be buyable. Like I said, I've got the blue dots to help me see the volume shifts, but you could probably do it without them. Most of the reversal bars are going to work as long as they're aligned. So like I said, you have to get above them. That's the key. Got to get above a purple and be above a pink somewhere, or not be below it. So this is where it starts, right? I've got all my big deltas to the left of me. As long as that continues, I can buy dips in that box's range because he is trapped. This big delta is trapped. And I know it's bullish. So this, and this. Right? Like, I don't even need the signals. Like, you could just say, like, well, there's one. Yep. So you could do it with this one. And get it there. And now you could, the cool thing is you can also do it the bull as long as you haven't gotten a bear. So the bull ones are like here, big spike. I wouldn't buy it. But if you get a pullback, so if you see that and you get a pullback and it holds, you only put purple bars under it or only wicks or just no VPOC on a regular bearish bar like this. Well, any reversal bar basically, as long as it's got some reason to get long, it's going to work most of the time. Will it sometimes stop out? Yes. But as long as you didn't get VPOC below this, you can probably just buy the trap. So you might get stopped sometimes. You will get stopped once it slows down. It only works with momentum. But like, you could even buy the pink. Right? And then you get more delta. So now we can just stretch our range of where we're willing to buy pullbacks. So like, even that works. Even that will work. Now this one you might have stopped, but then you just take this one and make it back. And then you had another big delta. That's all I'm really doing. Didn't get VPOC below it. Pullbacks that close bullish are probably buyable. Now, like I said, sometimes they're going to stop. But as long as your big delta didn't get beat, you're probably going to be fine to buy the trap. In this case, by my rules, I traded under with VPOC. I traded under my pink. So I'm not supposed to buy that. But really, if you look closely, like this one also had a big delta spike. It just didn't quite measure up. So as long as this one holds, you can still buy the trap. That's the limit of like, you have to draw the line somewhere. Like, when is it going to draw a box and when won't it? But you don't technically need the boxes if you just have the delta. You'll just be guessing a little bit. But I mean, if you look back, it's like there's a pretty big difference between that and that. It's just not enough to trigger the box, but that's going to make this in a bull trend pretty strong. When will that stop? When you get under it with a VPOC, or when you have divergence, it's going to start to slow down. So there's one, pullback, buy. There's divergence. See how we are going up, 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 down. I'm not buying that dip. Not like, that's really dangerous. It works, but eventually that's going to stop working. One of these are going to fail. See how it's continually divergent? And it keeps working. I mean, you have to be careful, but it appears it might not be that important. Did it take out the pink? Nope. Nope. So, by those rules, it keeps working. With the exception of this one, which just misses by a hair. So you miss this one. Can take this, can take this. I can probably take that. Can take that, can take that, can take that. It actually wasn't divergent on this time frame. It just sort of slowed down. Oh, there's no pink. So it's not necessarily divergent, but like there's no more spikes until here. So technically you want your pullbacks in here. So these two are fine. This one didn't reach the last big delta with, based on my numbers, it was that. Doesn't mean that won't work. No, it's just not enough delta to trigger the algo. So this one was pink right here. It was divergent. So this is a buy because I don't have a VPOC below pink and it's bullish. And then any blue in here is a buy. They finally die off on a lower high. Okay. Well, interesting. And then once you identify that it's bearish, oh, well, yeah. And then if you get a pink, right, if you get a big delta and you get under it with a bar that's not purple, a bar that has real volume, I'm going to do the exact opposite. I'm going to, until I get a pink and get above it, or get above a purple, which is just the opposite, then I'm going to look for pullbacks into there. But see, they trap him and put a new yellow, new pink in. So once again, I can buy down here. So this would technically be buyable, but we did trap him. So the risk reward's not very good, right? We'd have to get out there. I could technically buy that. Risk reward's not very good. Now I've got a purple and I've gotten under a pink. So now I want yellow dots. And I'm ignoring this because the risk reward isn't very good. There's the yellow. Oh, it just missed it. Yeah, that's too bad. Just missed it. But now it's bearish. So it's short here. And you could actually short this too. Yep. It looks easy. I wish it was that easy, but it doesn't usually range like this. But at a trend day, it's going to work great. Okay, one more thing, then I got to go. It's getting late. Wow, 3 hours. Okay. So one other interesting pattern is where you get triangle, and then the next bar goes in the same direction as the triangle, and it's got a box. I don't know. I'm going to find out right now. Actually, I might have to make a quick phone call. But I don't want to forget this because I figured this out today. What time is it? Okay, yeah, I've got another 30 minutes. So let me take one more quick break, and then I'm going to show it to you. We're going to find the, we'll make it quick. But I want to double check on this because it's really interesting how when the signal fails, like getting behind it is actually a really good trade opportunity. What I want to know is, should I be ever taking it with the direction, or should I wait for it to trap? So I'll be right back. So I'll take it back to today because I saw it working today, but I'm gonna, if I can, very quickly scan for see if it works elsewhere. So we're specifically looking for a triangle that is followed by a box in the same direction. And I don't know if it's ever a good idea or sometimes a good idea to follow that direction, but I see that when it reverses there and they get behind that box, it can be pretty explosive. So, like I said, I'm just going to kind of scan for a triangle and then the very next one being a box. Like I said, I definitely know it works with the blue and yellow ones. And it might work with the pink and purple too. Okay, so like here. Pink. Oh, never mind. That's with the same box. That's the same bar. So no. Same bar. No. No. Just looking for every triangle to see. So here. So triangle. Very next bar is a box. It's not, doesn't mean it's time to sell necessarily. But what I'm finding, or what I found, I thought today, was how does this work? So I thought the way it worked is, I know if I get behind this box that it's probably not bearish unless they trap somebody, right? But I think the way it works, is if we mark this area, triangle followed by a box. And like I said, it works a little bit more clearly with the other boxes, but it might work with this too. So getting behind like that on a bar that's not pink and then holding this will make it bullish, but getting behind and losing this, or really it's reclaiming it, can produce monster moves. Sometimes it just goes, like this pullback doesn't even really happen. And what's better, if you're looking for continuation, is if the box doesn't fully retrace, because that should only happen when it's really like heavy momentum. I think it's going to get hard for that to happen with the purple and pink ones, but I do see it happen with the blue and the yellow, because with the purple and pink ones, there's a lot of volume in those bars most of the time, not always, but usually. So it naturally like wants to negotiate that range a little bit. So I think with these, I'm going to if they do get beat at all, I'm going to have to wait till we get under it again, because otherwise I'm asking to get trapped. But I have seen it trap, hold, and go. But I already knew that. That's just trapping a box. That's not any different. But the reclaim of these and the immediate continuation. Okay, here. So we know it's bearish. Triangle. Next bar's box. And we don't reclaim it. Right? It's bearish. Like, I'm pretty sure when this bar does not retrace, you can get 10 points here, and you can even sell this, which is weird, but I saw it work multiple times. And so once you extend, that can be your stop, it looks like. So now it's starting to look not so bearish. So I'd be out, but that is pretty good. And look, that zone is defended. That's reverse. We want triangle first. It's got to be in the same direction. And it can be either box, I think. I know it works with the yellow and blue. Appears to work with the purple and pink too. So triangle, here's one. Yellow box, right? If it's bearish, this will hold, and probably just continue. In fact, this will more than likely hold. If it doesn't, and it becomes support, it's probably bullish. So see how at the moment it's holding. We have not gotten VPOC above it on a bull bar. Yellow there. Now that might not set up again, but that looks bullish. right? We trapped the box that came after the triangle. Do they use it again? Oh, and then we got another one. Triangle box. It's the box that really matters. So that one triggers bullish, and then we get triangle box if, and the very next one doesn't fully retrace. I'm assuming it's bullish. It does continue for at least 2 bars. It's not that bullish. It ran into some resistance. So even that is success. But let's just see what happens here. Does this become support? Not the first one. Does this become support? Yep. See that? This one, we closed above it, return to it, and bounces. This should be support. Triangle up, square. This. Oh, wait, we gotta see what happens next. It fully retraces. So now these stacked up, so this might still hold. But at this point, I'd have to wait because it didn't continue. But if this then becomes support in the future, that could be another long. Otherwise, if it gets taken, it's probably bearish. Right here, let's see what happens. Oh, triangle box. They're doing it the other way. So at the moment, it looks like it's not, the first one's not going to hold, which means we might get a monster drop. But again, I don't know if we can with this behind it. We'll see. Oh, yeah, see, we do not retrace it. So now a pullback should be sold. We might not get it. Oh, there we go. So it bounces off of this one again. Pullback is sold. There we go. Triangle box. Ah, reversal. Right? So not bearish. Because the triangle box got, the box after the triangle got fully retraced. So hold on. Okay, so not bearish because the box after the triangle got fully retraced. So if I was short here, I'm out. I'm not surprised to see that this didn't create a monster trade to the downside because we ran into resistance. It wasn't super bearish, but let's just see if this now reverses fully because I think it might. So see how this is continuing to act as support. Purple, purple. Oh, triangle box. Interesting. So this got fully retraced and beat and then reversed. Now this one. Does that one get a reversal? No. No full retracement. So that's bearish, right? Yeah. And that's all I'm looking for. So the one that didn't work the way I thought is this one. We got another box. Oh, I see. The triangle had a box as well. Oh, so even though this looked like it got retraced and beat, this box did not. I don't know about that. How that, when it's 2 of them in a row. But normally, what I thought, the way I thought this worked, is triangle box retrace, and then if you reclaim that beat box, you get capitulation. That's the biggest trade. Otherwise, if you find support here, you can get reversal. So let's just continue here, because this one got immediate continuation, no retrace, so you can just sell it, especially considering that it's reclaiming this one. That's probably the, oh, we know it's pretty much the low. Triangle box. What happens after that? Almost retraced. I assume higher. Yeah. See, it did not get fully retraced. So you buy this pullback, I assume. Yeah, that's cool. And this one got reclaimed. They did not beat it this time. See that? It held. Just barely. Triangle. Oh, no, it didn't. Oh, maybe. But look, this acted as support. And that's what I wanted to see. I don't know what happens when it... All I know is that when it gets fully retraced... If it gets fully retraced like this and beat, you need to wait for it to get reclaimed to sell it. And then oftentimes you'll get capitulation. But what's better is triangle, box, and then it does not get fully reclaimed. And that's bullish. And then that level can be bought in the future, even if you miss it. Come back up to this one. This one's still working. That's kind of crazy. From way back here. Nuts. Maybe not for long, though. Triangle box. What happens to that one? Continuation. No, literally no pullback. So I'm pretty sure you can just sell it. Look at that. I think that's neat. I mean, I know it's only a couple bars, but I'm telling you, with 2 contracts, like, that's $400 every time that happens. Okay, triangle. Oh, see, this is triangle, then box the other way. That, and it's in position. It's pretty bullish. If it gets follow through. You can just take it here if it's an apex trap, but you really want the triangle. And I'd prefer it not to be pink, actually. Triangle box. Does box get retraced? No. So just buy, basically. And then any pullback into that zone is going to be bought, more than likely. Triangle, no box. Box is on the triangle. Do we get back there? No. I don't think I missed any. There, triangle box. Hold on. So what happens to this box? Full retrace. Probably bullish. Only bearish if I reclaim this. And this area probably is support. Yeah. Triangle box. What happens here? Full, I think it's going to get full retrace. I haven't seen yet, but almost full retrace. Bearish. Unless we reclaim this, then it's going to squeeze. Reclaimed, probably. So you wouldn't know for sure till it got above here. But if it reclaims it, it's going to squeeze. It's interesting because this actually only got a purple under it. So it might already be bullish because it got fully retraced but no VPOC below it. Kind of like that other time. And that time it immediately ripped. And then this triangle box. So this should definitely be a buy. And I bet the next bar will not retrace. See, does not fully retrace, look. So that can be bought. And it should just frenzy squeeze. Yep, at least a bar or two. That didn't go as far as I wanted it to. Is this support? They play with you. Triangle box. This is, see how they got purple under only? So this box needs to hold. Now it'll probably squeeze. Yep. I saw it over and over again, and I'm like, wait a minute. Can't totally explain why that works, but that's pretty neat. Okay, so I'm gonna have to check on other time frames and other days. But that is how I thought it worked. I don't think I'm missing any. I'm not trying to. Triangle box. No retrace. Another box. It's probably bearish. Any pullback can be bought. Can be sold, sorry. That can be sold. Look at that. Triangle box. No retrace. Buy. I know it's late, but it comes right into resistance. So you do have to think about that. Okay, does it hold? Purple? Because this one did, so that should be bearish. This one does not hold. So this is going to tank. Oh. No. Interesting. So this one held. This one did not. I assume it's bearish. I just don't know where it starts from. So just losing it doesn't necessarily mean reverse. Because, yeah, they reclaimed it here too. Look, box, lost, reclaimed. If this holds, it's very bullish, but I don't think it will. Nope. Triangle box. Obviously, it's not going to work the same every time. Does it retrace? Yes, full retrace. So probably not that bearish. And if we go higher, this can be support. Yeah, see, it only goes a little bit. It did beat it, though. Oh, wait, no, it's bearish. So it did not beat it. It got bearish. And now we've gotten back to it. But it got fully retraced initially. I want it to be support. Oh, but I guess since we did go down, maybe it's bearish. And that's resistance. Ah, so it may not matter which way it goes. It's just if it's retraced, you have to wait for it to leave one way or another. And then whatever way it goes. So if it goes lower, the short is here. Ah, I almost cascaded the windows again. So that's triangle box the other direction. It's probably bearish. See that? We have to get over this to be bullish. Triangle with the box. No. Not quite. Triangle box. What happens to that bar? Retraced. Wait till we leave the area. Chop, chop, chop. Leave with purple. Triangle box again. So if it returns to this area, I can short. But what happens to this one? Full retrace and then closes lower. So probably bearish because it's already left the area. But I want it to reject. Oh, comes all the way back up to here. Now it'll reject because it never came back to this retrace one, of course. It's going to get choppy, yeah. That makes sense because it's got two of them. So triangle, box, full retrace. So no decision till they leave. They get pink above it. Purple below it. There. Now it's definitely bearish. But I mean, you could see this one got retraced, this one got retraced, this one, sorry, got retraced, and this one got retraced. So each of these, you needed a retrace and a rejection. This one, retrace. Oh, that one went over it, so you have to wait. retrace, reject. That's a sell. Now this one, reject, we need a retrace. No, we're not going to get it. I didn't miss one, right? Nope. That one just let it go. Oh, triangle box. No retrace. Bearish. Boom. Triangle. There we go. Triangle box. What happens to this? Retraced. Wait till they leave the area. There. Bullish. Any retrace into that range can be bought as long as it holds. That's probably okay. But we really want, I really want a wick in there. Let's see if we get one. No. Yeah, they were so close, but if I saw this, I'd be like, whoa. Okay, so I need triangle, then that one didn't quite reach. Triangle, then box. Same direction. Opposite directions, usually reversal. That one's only pink above. That's a problem. Triangle up, box down. That's a reversal. Triangle, box. Okay, what happens to that box? It gets partially retraced. It's bearish. Oh, that one did not work. Cool. It's going to happen eventually. It did not get fully retraced. And then once it left the area, it probably doesn't come back. Yeah, because usually when something like this works that often, when it stops working, like, it really doesn't work. Wow, look at that. So retrace. And then just run. I don't know how to catch that. That's okay. Triangle, then box. I don't think I skipped any. That one's got a box on it. Okay, that's a reversal if they go higher. They don't. I wonder if that, when it doesn't continue like that, if that triangle is sellable. Huh. I'll have to watch for that too. I don't, that might not be, I have not watched for that pattern. Triangle box. Okay, what happens to this range? Full retrace. Wait till we leave, then see if it can act as support or resistance. We left, so we're looking to see if it comes back and acts as resistance. That's probably it. Yep. So that's what happened down here too. Doesn't look like it has to touch it. It just has to, it's almost better if it approaches and doesn't reach. Oh, and this you could actually go to this. Because in real time, that's how that works. Nice. So they do finally get back to this one. And look, they got through it, so you can't buy it. Pink. Under. Now we'd want to retrace in there. And now a rejection. Like that. Oh. Right? Because that was the one that never did it? Yeah. Huh. Alright. Let's see. Nothing there. Triangle box. There's another one. Not fully retraced. It's bullish. Just basically buy it. Yeah, and that probably is going to hold. Oh, it's where that's right now. Fuck, I'll buy it. Market buy. Okay, so that's the 24 tick. Let's see if the pattern's the same on the 15. And then I gotta go. Oh shoot, I gotta go. I didn't know that time. I saw it happening on the 15 too. Let me just real fast. I might have a little bit of time. Let me double check here that no one's okay. 15 minutes, and then I got it. Okay, so look. Triangle, box in the opposite direction, lifts. Triangle, box in the opposite direction. The apex trap off of that works. Doesn't necessarily immediately lift. Okay, but I want triangle, box in the same direction, really. Triangle, box in the same direction continues. It's bearish. Yep. And again, I'm just looking, it's just a scalp. If I can get 10 points from here, I'm good. That one is the low, so wouldn't be surprised if it doesn't work. Oh, sorry, it's not from there. It's from, oh wait, triangle, box, continue. It's from here. So just barely. Okay. Triangle, box. Fully retraced. Right? Can't get out. Gets out here. You need a triangle above this, and you don't get it. It goes lower. That would be a bad place to sell. But this one works. Yeah, it's like it looks like it has to be in the same direction as it. Well, wait, no. In this case, it's the opposite direction it left. No, I see. It's just the second time. I don't know if it works the second time. Okay. Box after a triangle. Immediately lifts. You'd expect that to be bullish. And that one fails. Although it's definitely counter trend. So the smaller the time frame, you may need to be more careful with direction. And that totally makes sense. Okay, so let's see. It's hard doing it in reverse. Just get rid of here. Erase. Yes. Okay, so nothing there, nothing there, nothing there. Triangle, opposite direction box. Lifts. And that, again, that's buyable, is kind of the idea. Maybe. I don't know if that works. Here again, triangle up, box down with the trend, falls. Probably not as good for like a reversal signal, but if you're trying to get with the trend on a pullback, I bet you that works. Like, yeah, because that works anyway, just trapping a triangle and following with the trend. So none here. No, no, no. That's funny, we saw more on the 24 tick. That's weird. Unless I'm just missing them. Triangle box. Nope. Yeah, these out of position ones way below the channel that get beat are monsters. Triangle pink then box. Nope. Triangle with the box. None of it. It's like it doesn't happen. Here's one. Triangle box fully retraced. Wait till we leave the area. We go up. If it holds, it's support. More or less. I guess you probably have to do that. It's not quite as pretty as it was in the 24 tick. Triangle box, fully retraced. So we know it's bullish here, but it does not come back to set us up. That's the low, though. I wouldn't necessarily expect that to come back. Triangle purple box. Next one goes lower. We'd expect this to hold and this to go lower. And that worked. Triangle, then box. Ooh, the next one does not fully retrace. So I'd expect it to be bearish. And it then retraces. So once it gets up here, this is support. That's definitely the safer way. I wonder if it doesn't have to be one right after the triangle, if it's just a late one. See, because like this, triangle, box, keeps going. So I would think bullish on the bigger time frame. And you do get one bar and then a little more. But eventually, it's going to retrace. And the better trade is to sell after it breaks down. And really, that's the same as selling the breakdown on this box. So perhaps it's not so much the triangle being right before it. Here, see, there's another one right here. But it's just that it's a late box. Can become support or resistance. See, this gets completely retraced. So I would think I'd want to wait till it leaves. And then if it becomes support, it's good. But it doesn't. So that one just doesn't set up. Triangle, box, here they are. Now I'm finding them. Immediately goes lower. Is this support? Kind of. But again, the better trade, wait for that to be resistance, wait for that to be resistance. So in other words, resistance until beat. But see, this one is not after a triangle. Actually, there's a pink box before it. So this is all big delta. Even though there's no triangle above it, it's big delta, and we leave the area. Coming back to it and rejecting, with triangles being the entry, it may not need the triangle before it. It may just be that the big delta produces like pivots. Because this one, fully retraced, and then if I got a triangle up, I'd expect it to go higher. It doesn't. But look, it goes down, and then triangle down gets us lower. So it's maybe not as exciting as I thought. It's just yeah, here's another. The boxes just act as pivots. So here, fully retraced. Wait till I leave the area. This one technically left lower. Breaks higher, gotta wait. Breaks higher, gotta wait. Breaks lower, I'd want to pull back. And that doesn't quite reach. But it's got the VPOC here, so. And then this one too. They do it over and over again here. Immediately goes lower. So definitely bearish. Sure, you could sell this. But what's better is selling this. And this. And this. I think that's all it is. It's just that the boxes produce really good support resistance, which is cool. But I think I was a little hyper-focused on the pattern, and it actually doesn't matter what, oh shit, what the pattern is. That was the 15, right? Yeah. Where are we? Yeah. So in that case, I wonder if even the ones at the beginning, like this, if that's now support. Like it might be that simple. If it gets over it with VPOC, returns and bounces, it has the potential to be support. And then this one. could be support as well, I guess. The hard part about doing it on the reversal bar is you're not going to know what direction you're going if it goes the other way until it comes back. So the reason it works well on the triangle bars is because the next bar is usually nice and small. So I think it's like a late one. So I bet if I do this and I say this is a pivot, so short that and buy that. Okay, I can live with that. That's actually kind of neat. And then is it the same thing here? When they double up like this in the middle of the range? This should be resistance. Barely. Well, this one has a box too, so maybe not. Ah, support, 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 support. Leaves the area. Can't get back, it's bullish. I mean, that's pretty straightforward. I'm trying to think of how to code that to be automated somehow. And I'll think about it. I might have to do something where it's like, I don't know, like draw a rectangle from its low to its high and then signal if it gets VPOC above it or something. That, I don't know. Automating that is kind of tricky. But certainly I can draw it. Oh, nice. I got paid from that silly market buy. That's always fun to make $500 for joking. I mean, it's not real, unfortunately. It's just in the Apex, but in the evaluation. But that, I mean, it does make sense. Huh. I'm kind of impressed that it works as well as it does in the 24 tick the way I initially saw it. I don't know. I'll keep playing with it. Anyway, this got really late. I gotta go. I will see you all soon. And if you want to contact me, that's my contact info. And that's where you get a hold of Simon if you want to check out the algo.